Nation. It is Tuesday, June 3rd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we take you through the rest of this trading day. Futures market closes at 5 p.m. Eastern. If you're joining us on tastylive.com on the platform, thank you for joining us. Come over to YouTube. Tell us what you're trading today, what you think of this docile day in equity markets where we barely have 1 million contracts traded in ES. We do float higher in one of these, what feels like a summer trading day. Low volume, low vol, slight positive technical drift. Bonds here, they twist. They ultimately turn down a little bit lower over the course of the session. And right now, that's where they are, mostly mixed. Although ZB does bounce back here, up by 0.22%. Metals take a day off. The dollar bounces back. Maybe there's a story there. Maybe things are going back to normal, Ilya. Stocks up, gold down, dollar up, bonds down. That's okay. Energy perks up a little bit here, too. It's not a significant week for earnings, although the news flow today, Dylan, was just so spicy, which we let off with, of course, here. Elon Musk apparently is now breaking with the Trump administration, calling the legislation that's making its way through Congress a disgusting abomination, a massive, outrageous, pork-filled bill. Dylan, is this the end of first party capital?
Those are my kind of words, disgusting abomination. I feel like that when it comes to describing American political activity with the word abomination, I feel like I almost have a trademark on that word. And so I'm sort of pleased to see that Mr. Musk has caught on to the abomination that is the American government and understands that there is actually no difference between the Democrats or the Republicans because both of them rule the government in the interests of their favored donors, whatever, friends, and all of it's an abomination. You know, I said this when I was on with Ari Melber last week on MSNBC. I think Elon Musk's biggest failure in this whole undertaking, of which there's many, was his absolute naivete or maybe arrogance in thinking that because he's the world's richest man, that he could get involved with the government in some way and then alter its culture in a way that wasn't catastrophically exploitative of the American people for the interests of the people that are in the government. And I think that, what we see is whether it's the Trump administration now or the Biden administration before that or the Trump administration before that or down the line, whoever the party out of power is, accuses the party in power of exploiting the U.S. government or of using the U.S. government to exploit the American people with the promise that they're not going to do that. And then they get power. Because the reality is whoever has the power, Republican or Democrat, is always exploiting the American people in their own self-interest. And so it's the best thing to run on as a member of the opposition. And Trump is probably one of the best because Trump really laid out and was like, I'm going to fix it, all of his sort of populism, and only to roll out the biggest giveaways in the history of mankind in a massive deficit and. It'll be interesting because Musk is the sort of person, especially with all that he's learned about the political process and the political organization that he's been able to sort of assemble. He may become a great opponent of the president as an outside third party, although I suspect he'll more likely disappear and take his SpaceX contracts and his EV subsidies and move on. But if anybody was sort of willing to pick up the gauntlet to now go to war with the administration, it might well be Musk.
Ilya, it's a fun story today, but it has literally zero impact on the price action.
Yeah.
The market cares very little about any of the headlines that we've heard. You were obviously out yesterday, but you missed the opportunity to see a market that, I guess, reacted to the 50% aluminum and steel tariffs, although it seems like today's kind of like a Taco Tuesday. Trump's threatening us all, but is anything really going to come of it? Is that the market we're in right now, where until he breaks something, we're not going to believe his threats that he's going to break anything?
It's an interesting setup here because you do have to get through, I think, this sense that there is talk and then there's consequence. And obviously I've been banging this drum for months and months on end. The markets have been disinterested in talk for a long time. What the market is interested in is consequence. And we saw this as early as last year. We keep saying this, but I think it bears repeating. Tariff talk is not what the markets are afraid of. Tariff talk would have had them selling off in November if that's what they thought of it. What they want to know is, what is all of this stuff going to do for the real economy? They didn't start to sell off until mid-February, because that's when the actual data started to tell you the way that these tariffs are rolling out is hurting business confidence, hurting consumer confidence, hurting the economy. To the extent that the tariff talk spurred front running, which we saw in the first quarter GDP numbers and the PMI numbers and all of this, that's given this whole thing a little bit of a lease on life. But boy, were the PMI numbers out of China and the US ugly at the start of this week. China had the worst manufacturing numbers in 8 months. The U.S. manufacturing numbers were in contraction territory again, if you look at the ISM numbers. And the revision from S&P Global was all kind of the tail end of the tariff front running. They run their survey a little bit differently, so you're bound to get some differences. But whatever goodness there was to be had from people attempting to pile into inventories ahead of these tariffs, that seems to be running out of steam. In fact, it seems to have already run out of steam. And so it's the reality of the situation. It's the consequences that I think the markets care about. They're getting increasingly less interested in the bark. And I think you're seeing that. What they want to see is data. And the data isn't good. But they do want to see that data in the hard numbers. And we're starting to see it. It's starting to show up. It's, in my mind, a matter of time at this point.
We did have one piece of data come out today that drew interest and perhaps spurred the market on to a bit of a move higher here. We're looking at the Russell 2000, which was the top performing equity index today, up 1.65% thus far in the session, easily outpacing its peers by a scale of 2, 3, 4 to 1. But to that point, the Russell really takes a leg up after the JOLTS report for the month of April.
Yes.
The job openings layoff turnover survey shows 7.39 million job openings for the month of April. That's above the previous month of 7.2 million. It's better than the forecast of 7.1 million. It also gives you an interesting juxtaposition against factory orders figures that came out at the same time for the month of April. Factory orders in the U.S. for the month of April were down 3.7% month over month versus an expected pullback of 3%. So there's contours here. The labor market thus far is still proving resilient, and that's probably good for the Russell 2000.
Yeah.
Dylan, I think about one of the narratives that we've been peddling here on Overtime, which is the Buy America, Sell America narrative. We have the dollar, bonds, stocks on one side of the equation and gold on the other. When gold goes up, everything else goes down. When stocks, bonds, and the dollar up, gold is off, right? Today you have Treasury yields that for a large chunk of the session were pushing higher. But gold prices were off and the Russell was still moving up, and it lands this session as the top performing index. Could I sell you a story, Mr. Radigan, of stocks up, yields up, dollar up, gold down, oil up, being a pro-growth kind of day? Maybe
Stocks up, sure, for sure. We can, with stocks up, dollar up, I can get you there. Where are your bonds?
bonds settle out now at the end of the session, even. Short end of the curve is a little bit
Okay, so
softer.
we call bonds unch, dollar up,
Unch.
stocks up, bonds unch, gold down,
Oil up.
oil up. Hell yeah. Sign me up.
Ilya, why is it wrong to look at the market through that perspective right now?
Well, oil's been going up for let's call it 48 hours. It's had a really blistering sort of a run since the beginning of the week. This looks like a little bit of a slower version of yesterday, and much of that seems to have to do with geopolitical fuzz. And if you look at, let's say, a daily chart, 4-hour chart, 8-hour chart, just something to give you a sense of where you are, you're really just at the top of a range here. So I don't know if I take this as anything to write home about. I don't know if that fits into a pro-growth narrative here. Copper, for what it's worth, was down and then rebounded to basically unched. So that's a little bit more support in that kind of a pro-growth direction, but nothing is ultimately making headway. Gold is down, but it isn't overturning yesterday's massive breakout. It's only consolidating. So if you do have a pro-growth story here, then what that looks like is a pullback in a larger anti-growth story that we saw yesterday. And the flip side of that, the retracement on something like that would give you a pro-growth vibe. But the anti-growth push yesterday was much more convincing. Certainly oil didn't have it, but oil is off on its own thing after Ukraine figured out how to park lorries inside of Russia and then send a swarm of drones out of it. So
that was straight up, by the way, right out of that Slaughterbots PSA that I've shared with both of you guys in recent months. That was straight out of that PSA.
Which, by the way, man, the ingenuity, hats off. Well played.
Any soft military asset anywhere on Earth now is going to be reviewed, Dylan, right? There's your excuse for more defense spending. We don't have enough anti-drone technology in the air.
Oh, yeah. But I mean, if there's anything this Ukraine war is demonstrating is that the weapon of the future is the drone.
Dylan, I see that we're at the top side of the range. I know that you've, put bread on the table in recent months by being a guy who sells spikes in oil around geopolitics. I can't help but disagree a little bit with Ilya because I'm not seeing that big swell in volatility that typically accompanies that comes alongside that geopolitical outbreak. But we're also near the top side of a pretty significant range that's been carved out in recent months. If we think about where prices have been coalescing, I'll go to an 8-hour time frame here. We're effectively at the midpoint of the highs and lows of the past 6 months. So, Dylan, do you trade this and buy through 64? You think oil's going to run up here, or do you fade it like you typically do? You think this is a good spot to sell oil?
I mean, my oil is. I like oil when it's really clearly a spike on fears of World War III.
Mm-hmm.
And in this case, I don't think that's what this is, because I think this is as much an indication of sort of optimism for economic activity and sort of short the Trump the taco tariff man. So it's sort of like, oh, the tariffs are not really ever going to happen, or not going to happen in a meaningful way. So I think that this is as much an opinion on economies as it is an opinion on the Russia-Ukraine escalation. And so I'm less confident to say, oh, well, this is an oil spike, sell that thing because World War III is not going to happen. I don't get the sense that that's why oil's doing what it's doing. I've just been sort of marveling. I mean, I'm just sort of reflecting on our discussion yesterday, and I was on with Angeline this morning in London over at IG at the apparent relative strength of the U.S. economy in the face of a litany of, slowing factors, which we sort of reiterate constantly. And I'm sort of interested in, Ilya, even in how you interpret. I mean, what was that number you put up yesterday, Chris? Was it some economic data number, some growth number?
Oh, yeah.
Way higher than expected.
ISM manufacturing numbers,
good.
I would imagine.
No. The Atlanta Fed GDP Now growth tracker sitting at 4.6% for Q2. Ilya.
That's it.
Yeah,
which is a lot of give back because of the import figures that we saw in Q1. But nevertheless, Ilya, this is one of the reasons why I talk about differentiating geopolitics from the growth story here today.
Yep.
And whether or not we should entertain the growth story today, because there is a headline that comes out, right? The OECD puts out the Organization for Economic Cooperation and Development puts out its volume 2025 issue 1 on growth expectations moving forward, and they downgrade the U.S. forecast for this year. Pace was 2.8% last year. We're now looking at a pace of just 1.6% in 2025 and 1.5% in 2026. Global growth trending lower as well over the interim time period. So let's square the circle here. If oil is responsive to changes in demand for energy, which is highly correlated with global growth over the past several decades, how can we be sure that this isn't anything other than a spike of geopolitical concerns in oil? Because this headline suggests oil would be weaker reactionarily.
We can't be sure, and it's why I don't look at it that way. I don't look at oil as anything that has done anything that changes the overall structure. And I think this is really where you have to go back to the price action. If you had a growthy day today, and I completely agree with you that when you start reading off the list of assets and you go dollar up, yields up, stocks up, oil up, gold down, that's a growth-oriented day. And if you stop talking at that point, it's a convincing argument.
Well, we haven't. We've been going on for 20. We still have 37 minutes here.
But you can't stop talking at that point. You look at crude oil and you go, okay, you're at the top of a range you haven't broken in ages. Have you changed anything? Is anybody convinced of anything? No. You look at gold and you go, okay, it's down. How much is it down relative to how much it was up yesterday? Is it telling you anything convincing, or is it just digesting? And does it tell you anything that it's backfilling the high that it just broke through yesterday, retesting it and not coming back over the other side? Certainly not in any kind of convincing fashion. Is that a good thing? Is that really gold is down in a convincing way? Or is it we had a massive rally yesterday and today there is this soggy congestion? Look at the bonds. Okay, yields are up. Let's take a look at the long end. Are yields up?
Nah.
They've been falling, and there was a little bit of a pullback after a rally in the bonds yesterday. So are bonds up? Are yields up? Is any of this convincing? Or is all of this a correction in a trend? So markets don't move in straight lines, but what's the story in the bonds? Higher highs and higher lows. What's the story in gold? Higher highs and higher lows. What's the story in the dollar? Take a look at 6E. Yeah, the dollar is up today. Well, I suppose if a patient on their deathbed lifts their head up off the pillow, then yeah, it's up today. All of this looks corrective. None of this made any kind of meaningful headway counter the trend that's been prevailing for the past several weeks. Not one thing. And so, to me, this is there isn't much data. Things are kind of quiet. Yes, volumes are low. Yesterday, and for the past several weeks, the trajectory has been into an anti-growth direction, even in stocks, by the way, because we know stocks love going up and hate going down. And what has the S&P done? Nothing. It has gone absolutely nowhere since mid-May. Is this a story of exuberant optimism about economic growth? Get out of here. Where?
In the sector rotation today, was pretty good. Oil services, some of those sectors are leading the way up. OIH, XOP are near the top of the pile, but so is SMH. Semiconductors are up 2.26% in the session. NVIDIA has quite the day itself. NVIDIA up 2.82% today, as was Broadcom up 3.3%. Micron was up 4% and change. Intel was up 2.79%. So it was a good day for semis here.
I'll tell you what, you do have a breakout to take the devil's advocate of my own perspective is NASDAQ. NASDAQ had a proper encouraging day, and that certainly speaks to what you're saying here. It's looking like a higher close above the range. Now, it's fuzzy. There's a higher high there a couple days before, but if you look at the closing levels, this is a higher close, and this is legitimately this is a legitimate blemish on my own bearish narrative.
Well, I point out semiconductors, and I point to the retail ETF, Dylan. We've had our eyes on this as a hawk for many reasons, in part because it spills over after the Fed meeting in December and then doesn't really recover like everything else. And when it finally breaks down through the 77 level, it's on Friday, February 21st, which is the day of those horrible PMIs, Ilya. We try to recover through that 77 level, this line in the sand. It was support November, support in January. We've been trying to recover there for the past 2 weeks. Couldn't get through mid-May, couldn't get through there late May. Today we closed through there. It's not the exact closing lows, Ilya, as you would point to, right? We're kind of still pinned up against that in that area. That would probably be closer to 77.5.
Yeah.
But these tariff-sensitive names have rallied to places where the next few days are really put up or shut up. Like, you're through 250 in SMH, stone throw to 265. You get through 77 in XRT, who's to say 80 isn't around the corner? And then if the tariff names are the ones that are rallying through significant technical resistance, Dylan, I mean, you have to presume that it's going to be a good market for most of everything else. So the leadership here today is quite encouraging. It's the stuff that you'd want to see rebound that has the baton.
I mean, the only thing I wonder, the one I'm kind of thinking about is the small, I think that, yes to everything like this, right? For sure, tech. But even the Russell was what I was kind of watching today. Not to sort of divert from your commentary, but I just think that the canary in the coal mine for the anxiety about the disruptive nature of the Trump administration's policy agenda, or the most vulnerable thing, is obviously the dollar, and then also the small caps. And so I look at whether it's the Russell strength here or the dollar strength as increasing. I think that Trump is in trouble in terms of his credibility. And I think that the market is looking, as Trump is increasingly being perceived as a weak president who's more of a fool than a king. And I think that the market is sort of reflecting the perception of Trump as a policy fool more than he is as some sort of grand executive master, sort of king of the world, master of the universe sort of a thing. I mean, that kind of is a double-edged sword, because you feel like when you're dealing with someone with Donald Trump's personality who is so profoundly, desperately insecure and so desperate to be loved and liked and all the things that are sort of apparent when you interact or watch this person in public, that it incentivizes him to more extreme behavior, because his worst case scenario is to be seen as a buffoon. But at this point, I think he's sort of increasingly in the buffoon camp.
The market rallied today on a comment that we were hoping that China would call Trump back this week.
Buffoon.
I mean, honestly.
All right. Ilya,
maybe why you treat me so bad.
Okay, Ilya, let me entice something to you. I'm sure there are folks in the crowd who are with you, who are looking at this and saying, "That's right." Like, even yesterday, you weren't on the show. Someone had to fill the bearish role, so I tried to take a flyer on a long NASDAQ put spread with an expiration just for next Monday, trying to capture what could happen through the end of this week, really playing it into Thursday and closing it out before NFP on Friday. I didn't get filled. I tried to put it back on last night. It wasn't getting filled. And then the dollar rallying and gold going down. And I said, hold on a second. Like, those are things that should be good for stocks. So I took the trade out of the hopper. I ultimately didn't put it on. I'm thankful for that, because we're up by 0.64%, right? But I want to put something on the table, perhaps. Let's say we really pass this tariff anxiety right now, and there are folks who are nursing bearish positions and they want to hang on to them. Getting something that may be like a slight out of the money lotto-ish ticket, 30% probability of profit with a bullish disposition. In the loser names, that's harsh. In the names that have lost more than everything else, that's better. The Russell 2000, if you think about where this breakout could play through, we see a move up through 2150 or so. The next area where you get into some meaningful resistance is about 2200. It's obviously not the typical tasty way. We're not selling vol here. We're not doing something that's, well, I guess it's 45 in, but it would be a way to express something bullish that's been beaten up that has clearly expressed upside convexity. If bears don't want to buy in, feel like they're chasing ES or NQ, which have admittedly run for quite some time. Maybe.
I mean, you have to, as ever, I think, be very, very careful with selling equities and with assuming that you know when to do that. Because as a bear in this environment, I still have to look at this in an incredibly risk-defined, incredibly size-managed kind of way, because the market doesn't want to go my way as a natural function of the market, and fundamentally does not want to do what I think it will. And so taking this kind of approach where you back up and you go, okay, you know what, I'm just going to take a really small, really kind of, if I'm wrong, I'm only wrong a little kind of approach. That's attractive. I'm inclined to be a little bit more aggressive, but only a little. And so I'm directional, straightforward directional, but at no point am I getting away from, I'm not doing it naked. They're all vertical spreads. They're through the ETFs, which are smaller meaningfully than the futures. So my exposure in the Russell, bearish, but it's in IWM. Because again, I want to keep it small. I don't want to get in front of a train here. And all of these positions, when I put them on, they're structured through these verticals such that if vol is cheap, then I'm buying puts. If it isn't, and I can't get good risk reward, and thankfully stocks have been rallying, so vol is cheap, but if I can't get good risk reward, I may not even put it on. Or I may sell options to establish exposure. But in all of those cases, I am forcing a 2-to-1 risk reward on the position, and I am keeping size so small that if I were to let it run and expire worthless, it's a 1 to 2% hit to equity. Next move. Whatever. It's fine. I can do a lot of those before the account is any kind of troubled. I am also, and we talked about this a little bit last week, I have also really dialed up duration. I'm not looking at 45 in when I'm looking at stocks here, and increasingly other assets too. I'm looking at like 60. I'm giving myself a lot of time. And what that means is that there's less delta sensitivity. There is less sensitivity to the underlying asset. So if the underlying asset goes completely bonkers, because I have so much duration there, the sensitivity of my position is diminished significantly. And that's helpful, because it gives me a long time for the sensitivity of my position to catch up to the sensitivity of the underlying asset. So if the things I think are going to happen right away, I'm going to make less money. That's fine. Cool. But I have a long on-ramp to decide if I'm out of my mind before I before I have to say, this sense like we're like 10 days to expiration. I'm practically holding the underlying asset. It's running in my face. Obviously, I'm insane and I just want to set money on fire. I have a long, long, long on ramp before I have to start having those thoughts. And so I'm very defensive in my bearishness. I have a toe in the water. And I'm doing all of this precisely because the market doesn't want to go down, because it doesn't want to comply. It's not because my bearish conviction is through the roof.
No, Dylan, in fairness, he did say last week he is bullish on equities in Brazil.
That's right.
So he's not a true.
Working, baby.
Can't call him a perma bear now, right?
It's making money. Making money.
Let the record show from the conversation last week, Ilya refused to fight me in New York this weekend. And before Ilya responds, we'll move topics. Silver prices here. Silver prices
here. As I
here.
was walking through Flushing Meadow Park, I text Chris. I'm like, I'm looking at Citi Field. It says hello. Where are you at?
Yeah. Like, okay, let's see you in 90 minutes. Okay. So here in silver today, it was a really bad loss early in the session. The metals did get dinged, which I thought was a nice development over the course of the day. Copper and silver ultimately settle back up higher as we move through the session, but only modestly. Dylan, I know how you have a proclivity for silver over gold. So just to go directly into silver, this is a good deal of resiliency over the course of the session after yesterday's 6% plus performance. It cuts through that 34 area that we've been eyeing, where you've had the turning points through various technical patterns over the past few months. Is it finally go time? Can we start thinking about $40 an ounce silver? Or is
I
that
think so. I think that's exactly where we are. I think that silver has set what will become a new floor, and that certainly that little pullback today is attractive to just get a slightly better entry price. And I love the fact that silver's come all the way back to its pre-idiot day sell-off, and I think that is a very positive thing for those who would be silver investors like myself.
We opened up Liberation Day. Slight mispronouncement.
Mispronunciation
there.
You might have misheard me.
Getting old. There's some grace coming.
Tomato. Come on.
Maybe it's a bad connection.
Let's not quibble over vowels here.
Okay.
34.73 was the open on Liberation Day for silver prices in the SIN 5 contract. Today we close at 34.70. I'd say that we round tripped. We move that. We make the needle move there, and that's where we get a little bit of a, ding, the bell is rung. People who've been trapped in it for the last several weeks probably felt like this was a good time to get out. It's been a rough ride. But the structure here for gold, for silver, heck, even for copper, Ilya, that is a beautiful long lower wick to close out the day here. There's a lot of resiliency in metals, and I couldn't help but notice U.S. money supply is starting to turn up again. Global M2 money supply is charging higher. You and I aren't believers in these things, but we know there's enough people who think these things matter for things like Bitcoin, gold, silver, and enough people trade along those lines. So we have gigantic debts, gigantic deficits. We have tariffs that are real in spoken word, perhaps, but not in actuality. But the supply chain concerns,
that 10% levy is ostensibly still there.
Mm-hmm.
The court put it back. It flickered off a little bit last week. The machine's a little wonky, but it's back on.
Gallup released I think it was, or YouGov. Either way, I don't want to misassign this, but a bona fide pollster released a set of data today, Dylan, showing that Republicans were in favor of the International Court of Trade nullifying Trump's tariffs 43 to 42. Democrats 85 to 15. Is this quickly going to become, we've seen Trump do this before. We saw this before the U.S.-China trade talks in Geneva, Switzerland a few weeks back, where he said, it's up to Scotty B. It's up to Scott B to get a deal done. And then as soon as Bessent has something in hands, immediately Trump declares victory over that weekend, right? He was clearly trying to move this off his plate and put it behind him, given how much damage it caused in the market. Is that where we are for, I guess, everything right now? Is that where we're going to have the problems persist? We're going to have the supply chain disruptions, but the tariffs never actually materialize. So we just see squeezed commodities. We get.
Yeah, they don't call it Idiot Day for nothing.
But how can we say they haven't materialized when they have?
Because we have
a context across the board tariff today.
Yes. The context, of course, is in the view of today's data. Job openings are higher. The market is looking at the data that's coming down the pipeline.
Most lagged of all the employment data, the job openings.
Sure, but Atlanta Fed GDP now sitting at 4.6. I guess my point is that if the recession's coming, can you clock it for Q2? Can you clock it for July? It feels like this is going to happen late summer if it's going to happen at all.
I think you might be able to clock it for Q2 if you take the if you want to go by the definition of 2 consecutive quarters of negative growth.
Bless you.
You might be able to get one in the second quarter because this Atlanta GDP now reading is beyond early. There's no point in looking at this at face value at this point. We're nowhere near the second quarter GDP numbers.
We're 6 weeks out.
It'll be a long time. And that model is going to change a million ways before we get there. I think the larger issue, and I think this really speaks to sort of the landscape here. That same Atlanta Fed GDP Now model also gives you the context of what the consensus view is. So they always weigh up the model against what the Wall Street consensus spread is to basically see how off base Wall Street is. The space now is between no growth and 3%. That's a bonkers level of uncertainty. Nobody has any idea what's going to happen in the second quarter. The Fed doesn't know. The markets don't know. Nobody knows. What we do know is that we just had these PMI numbers, and yes, it's not hard data, but sort of that's the point. You watch this data so you can know where the hard data is probably heading. We already had the weakest global economic growth in 17 months in April. The numbers out of China suggest it'll be worse in May. The numbers out of Europe suggest it'll be worse in May. The numbers out of the US suggest it'll be worse in May. So I think it's very, very possible, maybe with more distortions, that you get a negative reading on US GDP in the second quarter. The question is this a real recession? Is Enberg going to call it? I doubt it. Because in the first quarter, who's to say that number was really negative when you take the tariff distortions out of it? Who says that the second quarter numbers are going to be really negative when you look at core underlying growth? The thing that, in my mind, matters more than any of this noise is consumption, which is the overwhelming majority of the U.S. economy. In the second quarter, there is a strong chance, looking at the retail sales numbers, the consumer confidence numbers, that you get another really weak quarter of consumption. And in the first quarter, it was the weakest since the second quarter of 23, so almost 2 years. So that's the concern. That's where the pain is. And whether you want to call it a recession with a capital R, or you want to say just, you know what, nobody wants to buy anything, either way, the pain is real. And frankly, it might be better for markets if the recession were to get official in the second quarter, because then the Fed would do something, and it would do something sooner. Maybe it might even do something in July. But I think more likely is you get more fuzz. Things are quietly deteriorating an inch under the surface. But as long as they're under the surface, you're not going to get the Fed to do anything. And by the time they do, and it's official, to your point, in the second half of the year, it's too late. And sentiment can't be rescued.
Dylan, before we go into a conversation about AI, I do want to have a cheeky remark here on our American life cycle basket that we've previously mentioned. Mm-hmm. That has luminary names like Philip Morris for your cigarettes, Netflix for your entertainment, Uber for your burritos and taxis, Eli Lilly for your GLP-1 fat shots, McDonald's for your fast food, and DraftKings for your gambling. That basket is now up by 27% from the low that we have back in April. It's outperforming the broader S&P 500. SPY is only up by 23.72%. It's a 3.95% outperformance here. Is that one of the clear signs that the domestic economy is staying intact and consumers are doing well, that all of our gluttony companies are holding up?
Did you have weed in there?
We don't have weed in there, no. I did see that new THC energy drinks are now available nationwide, according to some new law. They're part of the new psychoactive drink category, which includes things like Lion's mane drinks. I heard this report on Bloomberg earlier. The psychoactive drink category is going to have more sales, projected more sales by 2030 than craft beer in the United States.
We're talking mushrooms now, or what do we do with
that? Like mushrooms. Yes, mushrooms. Yeah, mushrooms. You know, psilocybin, all the general things that.
And you got video games in there as well.
All the things that Ilya tells me about that I know nothing about.
All those. No. The Hollywood.
We're on the cutting edge here in San Francisco.
I will never buy EA stock. I don't care what this company makes. I don't care if they take over Take-Two Interactive. Maybe it's Take-Two Interactive if you want to throw video games in there. This company has done quite well recently there. Of course, we're waiting out for Grand Theft Auto 6. EA
What's your beef with EA?
They're the worst company in America, consistently rated among the worst companies in America. They are the ones who single-handedly revolutionized loot boxes in sport games with like Madden Ultimate Team years ago, where like basically you play the game and build a fantasy football team with card packs you open in-game. And you play with that team versus other people online. But then, of course, they made it play to win. So you could just buy the cards you want. And like, so like EA is largely responsible for loot boxes appearing in microtransactions worldwide. They templated it as this can work to make you money for consumers. And so
tells you how much I know.
Well, it's just one of those things that's happened.
I feel like an EA game, I want to say, in probably something like 20 years.
They did the Jedi New Order games, which were fun. But the bigger issue is like that model is so like, why does everything feel like a ripoff today? Dylan, in like the 1980s and the 1990s, I'm sure you can attest to this better than I could, considering I was a child. But from what I've read, luxury items were difficult to access, but the cost of living for day-to-day was much more manageable. And now it feels like you have to pay a barrier of entry to get into anything, to have anything decent. And even when you do pay to get in the door, it's a total scam. So when we were kids, Ilya, we could buy an N64 and like, Legend of Zelda, and it would cost X dollars, and that would be it. And now it's like I have to pay a game to get in the door, and then I have to buy all this other stuff to keep playing the game and enjoying it if I want to stay competitive. And that's EA Sports. EA Sports did that. So I will never buy the stock. If anyone ever sees a high IVR here and there's an opportunity to short it into oblivion, please tag me on Twitter. Let me know. I would love to make more money shorting EA. In any event, Dylan, I do want to turn the conversation to AI, and we will add Take-Two Interactive to our all-American life cycle basket, because you do need some more entertainment in there besides, I suppose, gambling on sports. That's not for everyone. Dylan, in the legislation that's making its way through Congress right now, I asked Tom and Tony this morning, so I'm curious about your and Ilya's take on this as well.
Mm-hmm.
I'm
In the
assuming you
bill,
mean the abomination.
yes, the abomination, the one big
Yes.
beautiful bill, Elon Musk is calling it an abomination.
Slash abomination.
Slash
very-
abomination.
A very Ratagonian way of describing the
That's
bill.
my word.
But here's the thing. In the bill, there are specific provisions that provide $500 million to the Secretary of Commerce to embed AI into the Commerce Secretary's systems to help with automated decision-making. This obviously is an issue that's drawn a lot of people's ire and attention. Even someone like Marjorie Taylor Greene, who tweeted out today that she didn't read it was in the bill, which I think means she didn't read the bill that she voted yes on. Right. So I would posit that.
No, who's surprised, really?
I'm trying to grapple with the implications of this, right? Like, is this a sign? If we have legislators that have had experts like Elon Musk, who's certainly an expert in the field of in AI, right? XAI and Grok are among the top models out there in the world right now. His supercluster is incredibly impressive, the Colossus supercluster. Is this a sign that AI really has made it? Or, as I asked Tom and Tony this morning, Tom was very reticent about AI's impact on business back in February. Today, he's saying a completely different tune. He said it's having a real-world impact. It's leading to more hiring. He does not see it as costing people jobs right now. It's all about creativity. Just take this as a free point, Dylan. What's going on with AI in your view? Is this real in the sense that we're actually seeing the real world impact as opposed to just businesses selling each other services to puff up their balance sheets?
No, I mean, I think that we are. I mean, I think the easiest way, I think it was Bezos who said it originally, but I think the easiest way to think about AI at the moment, and at any moment really, as an additional layer of technology that is across every single thing that you interact with. So the same way that when electricity was invented and broadly distributed, suddenly electricity became part of everybody's life. I believe that AI is in the process of sort of spidering its way through the technological universe, meaning every website, every car, appliance, phone, obviously. And so I think that's a very real world thing. And I think one of the things that you're going to see with AI is the return of the idea, and not just the idea, the return of the reality of a voice-based customer experience. I think what you've seen over the last 2 decades is the move to sort of clickability. The idea was that the company would save money by having less people answering phone calls, and to drive more people down the funnel of their website to click on this, book your hotel room like this, book your airplane ticket like this, make your restaurant reservation. Everything is via an app and a click to reserve things, to buy things, to find information out about things. And I believe that the biggest revolution that AI represents in terms of the customer experience is that as AI sort of continues through its extremely fast, iterative period of development, that it will be most obviously manifest in the voice layer that then is going to return to every single thing that we do. We're calling to book a hotel room, calling to make a purchase for a new pair of shoes on a website, calling to do whatever, understanding that the counterparty on the phone call is going to be an AI-driven robot. But the customer service will migrate. I mean, and again, that's just one example, but I do think that the most tangible place where AI is going to be felt by everybody all the time is in the voice layer across everything, which will be a return basically back to the future. Because it used to be if you wanted to book a cruise to the Bahamas, you had to call your travel agent. And then we moved into this world of clickability. And I think that all that clicking is going to collapse in terms of its activity, and you're going to see a tremendous increase in phone calls and in voice interaction to transact. to the benefit of all of these charts across the board.
Well, I bring this up because I can't help but notice Google here. Maybe it's weighed down by some of the antitrust lawsuits that are making their way through the courts right now. And Trump has a bone to pick with Google, as has been made clear. So the fact that these are Biden administration lawsuits, they can't exactly cry political malfeasance. Also, Section 203 reform and getting rid of the monopoly and social media has been a long-standing bipartisan issue going back to Obama's years. I have tweets about how maybe we would see antitrust action in the Trump administration 1.0 from like 2015, 2016, because this was such a fervent issue back then too about social media. So Google kind of not performing as well as Meta or Microsoft right now, but I think that may be off. What do the markets know that we don't know? Isn't this a race to see who creates the digital god, Dylan? Google right now, according to Polymarket, is seen as the company to have the best AI model by the end of this year. 43%. It's not a majority, it's a plurality, but it's double, 44% now, double OpenAI. Is this the opportunity that traders have been looking for in Google? Maybe we have this overhang, but if this AI story is compounding, is picking up, you're looking at names like your Broadcom surging into new all-time highs ahead of their earnings report later this week. Even I had another stock ticker in mind here, but it's passing me up, and now it's back. It's Axon. This year is up now at new highs. Is Google the place?
Yes and no. We've seen this before, whether it was with Microsoft in the 90s, or you just see this happen when there's a new technology. The assumption is that the incumbent, essentially an incumbent that has access to all of the biggest pool of information, it's easy to understand why Google is the odds-on favorite to be the dominant player in AI. However, history suggests that the dominant player frequently isn't the one who can deliver the goods on the next gen technology. So yes, I think that Google is an interesting. I would rather own Google in this story than not. But I'm not in a hurry to do it just because it's still a 60% chance that somebody that's not Google is the dominant AI player by the end of the year. And Google is such a massive company, and it's really it's an ad-driven business at this point. So, there's more to it for them. I think that it's an interesting bet, but I don't think it's an easy bet.
Ilya, give us the word from Silicon Valley. I can't help but notice that new San Francisco Mayor Daniel Lurie seems to be turning things around on the ground there. Is what's the talk of San Francisco? Is AI about to make the next leap forward?
In San Francisco, things are, booming is probably a relative statement. The AI part of the situation is absolutely bonkers. There is, and full credit to Mayor Lurie, though not sole credit, because his predecessor, Mayor London Breed, was already kind of starting to move in this direction. In the wake of COVID, she had a real kind of hard pivot politically as a function of COVID, and Mayor Lurie is really building on that, and kudos to him. He's really figured out how to sell the vision. He's on Instagram with a new encouraging update pretty much daily. So the dynamism is really there. I don't think there is any doubt that this is going to a transformational technology kind of a place. We're talking about NVIDIA, obviously, coming back to build a huge campus in San Francisco, and that's just sort of to pick a name out of a hat from the big ones, but many more as well. And once again, the revolution in tech is based not only in the San Francisco Bay Area, but in this particular case, in the city itself. This is less a story about Silicon Valley. This is more a story of the city of San Francisco.
OpenAI's headquarters is right in San Francisco.
And Anthropic and the entire kind of the entire ecosystem. It's in the city itself. The city itself is mean, you can see it in Daniel Lurie's proposal for the budget. He's saying that we need to close a big budget gap. He's going to be cutting city jobs, and he's out here saying, but the focus is the place where we need to keep the funding is education and police and primary services and all of these things. There we need to spend more. Whereas any kind of frivolous or let us say optional feel-good type of stuff, well, that's probably going to take a hit. So there's a real kind of open for business vibe in San Francisco right now. Very encouraging to see, of course. City looks great.
I'm seeing it everywhere all over my Twitter feed that like people are
city looks
incredibly optimistic about like what
incredibly optimistic.
You're getting to like the other side of like the global financial crisis years where now it's kind of emerging from this stupor and you're going to start to see innovation.
COVID was a real kind of inflection point for the city. Basically, since the reopening from COVID, the city has really rolled up its sleeves and started to aggressively go after economic growth and development and public safety. My feed is full of videos of San Francisco cops using drones to fight minor property crime, just to kind of send the message out there like, that's it. That's it.
Yes, let's police U.S. citizens with drones. Dylan, we're going into the police state conversation now. So can you say the words?
I think we know what time it is.
Overtime is out of time for this Tuesday, June 3rd, 2025. We'll be back tomorrow, same time, same place, every Monday through Thursday here on Tasty Live right after last call. So for Ilya Spivak in San Francisco and Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. Ilya's back after a quick break for Macro Money. I'm back later for The Price of Truth with Vic Jones. See you later.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
The markets take a quiet day, but nevertheless, we do have data that is telling us that things are not so healthy under the hood. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we're going to go through some of the tidbits in economic data that's come out so far this week and coming up ahead of us here in the next 24 hours that suggest we could be inching deeper along the path toward global recession. Try to figure out what is happening here and what that means for the markets. And we'll start with some of the data that's come out here over the weekend, as well as over the past day or two since the start of the week. And from there, consider what may be next. And we begin with a look at China, where just over the course of the past day, we've had an update on manufacturing data, and you can see here with the naked eye what seems to be going on. We're looking at a steep run lower, and of course, most importantly, the reading here now firmly below this 50 boom bust level. As ever in the logic of PMIs, 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what you find here is that Chinese manufacturing activity is here at the weakest in 8 months. It gets worse. The situation seems to be primarily driven by a drop in export orders. Now, one would think we are in the middle of a trade war. Surely this is about what you would expect. But of course, we've had a much more supportive view recently, and things have held up quite a bit better around front-running ahead of the tariffs that the Trump administration threatened to implement as it was campaigning into November's election in the U.S. And since then, of course, we've seen kind of the volleys of implementation hit the markets. And in anticipation of that implementation, really since the beginning of the year, we've seen a great deal of front-running where businesses in the U.S. have really tried to build up inventories of all things that were likely to get hit by the tariffs. And of course, anything coming out of China falls into that category. And to try to squeeze that in, to build those inventories as much as possible before the levies at the beginning of the year. It was unclear what they would be or how this would all go, but whatever levies would come, that there was a desire to sort of stock up at the lower rates before those things hit. Now, looking at these numbers here, it looks like that front running has run its course. We get a similar sort of view from official Chinese PMI numbers over the weekend. Much like the U.S., China has two sets of PMI numbers, and we'll look at both here as well as both for the U.S. because we've got an update there as well. And we can see for the official numbers here, another month of contraction for manufacturing. But on these numbers, things are steadier, not quite as dramatic as what we see here. Here, the drop-off clearly looks like a shift lower out of what was increasingly a stabilizing range. But the upshot is about the same, which is to say that China's economy has basically failed to do much of anything for the better part of 2 years. And that continues here. The composite index at 50.4 on the official numbers from the China Federation of Logistics and Purchasing. That's in conjunction with official statisticians at NBS, the National Bureau of Statistics. Here we see basically flatlined, and flatlined for a second consecutive month here. So the overall story is the world's second largest economy is basically going nowhere. The larger issue, though, is that what we're looking at now looks like even the slight bit of a pop in manufacturing demand, saw that right here, around front-running of these tariffs has now given way and seems to be unraveling. On the U.S. side of things, we get the PMI numbers from the Institute of Supply Management. Here we get a third consecutive month of contraction in the manufacturing sector. Again, we can see it's had a little bit of a pop earlier, ever so slightly, but we continue to see contraction here, and the internals are hardly encouraging. Employment still below 50, continues to contract. New orders still below 50, continues to contract. A little bit of a stabilizing on this crazy jump in the price index, so perhaps a little bit of an anchoring here, but of course this is at extremely high levels relative to history. And when we start going through this by sub-components, this handy table from ISM really helps to visualize what's occurring. So here's the overall manufacturing PMI. We can see it deteriorated from April into May. It's contracting at a faster rate, and the contraction trend has been running for 3 months. New orders have been falling for 4 months. Overall production falling for 3 months. Employment falling for 4 months. Supplier deliveries 6 months. Inventories are contracting now. They had been surging. That, of course, makes sense. That's that front running of tariffs. So it does look like there's a little bit of a pull on this from some amount of demand. That's perhaps a little bit of a sense here. But the trend in prices for 8 consecutive months, we've seen prices surge, and of course at these very elevated levels. The backlog of orders continues to contract. That's not great news on demand. New export orders sinking. And sinking at a faster rate. You can see the delta on this change here, quite dramatic. 3 index points. So the overall story from both sides of the most crucial supply chain, the U.S.-China leg of global commercial linkages, showing that front running of the tariffs seems to be running out of steam or has already petered out. And of course, this then raises the most important question of all. Now, we've seen that businesses have attempted to fill up inventories because tariffs are coming. That much is clear. We can take a glance here as we're talking about this back at the first quarter GDP numbers, and we can see clear as day here. Here's the surge in investment powered by stocking up of those inventories. Here's a blistering jump in imports that tells that story. So very clearly here, we can see this is what's going on. But the larger question is, of course, who is going to come buy this stuff? Because this becomes then a two-pronged issue if nobody comes, or at least if uptake is slow, as we seem to be seeing in April's retail sales data. If we are not going to have happy consumers come and buy this stuff out of inventory, then first, there is the issue of companies don't need to buy as much downwind, and that, of course, is a slowdown in economic activity. So this kind of surge to GDP from investment, that's not going to happen going forward as a driver of demand if inventories are not pulled lower in a meaningful way. Now, we can see here, again, now they're contracting, so perhaps we're starting to see some of this. It's only 1 month's worth for now. But if the pace of uptake is not meaningful, well, then businesses are going to get stuck sitting on these inventories, and they're not going to be out there buying more and stocking up more. The first issue then is, of course, the hit to overall economic activity, but the second one is to the financial stability of those businesses, because they've now bought themselves, assuming weak uptake, a largely non-performing asset, an inventory that isn't getting turned over fast enough to make the business's costs and profits balance make sense. So as we look at all of this, we then focus on what are consumers actually doing. And this is where looking at the driver of consumption demand really becomes very interesting. And we can see here the S&P global version of these PMIs, which incidentally was revised today on the manufacturing side and revised a little bit lower. It does show you a little bit of a better view here. Manufacturing for May is expanding, albeit at a slower pace than initially reported. That very clearly seems to be the last gasp of this front running that we're talking about. We can see restocking is by far the strongest impulse of the subcomponents here. But the sort of main takeaway is that manufacturing has been anemic for quite some time. It's services that's been powering the U.S. economy. And whereas China, as we just saw, has been basically flatlined, the U.S. has actually had quite robust economic growth until the beginning of this year. It's really in January that things started to trend aggressively toward standstill. For much of the second half of last year, growth in the U.S. was quite strong. In fact, the strongest since essentially late 2021, early 2022. And you can see it's services powering that, and most service demand in the U.S. is serviced domestically, no pun intended. And so with that in mind, this really becomes the gauge of what the consumer is doing. You can see it in spades looking at the latest CPI data, and really CPI data over the past several years, where we can see that the overwhelming majority of the price impulse in the data is in core services, whereas goods demand is barely existent. Food and energy are relatively steady in terms of their contributions, but this is really where all of the demand is. Of the core CPI in April of 2.8%, 2.2 almost percentage points is services. So with that in mind, we look at what'll be the next big data point in this sequence, and that is the ISM Service Sector Index. The expectation here in the red that we are going to get a little bit of an uptick up to 52. That'll be a slight improvement over the 51.6 that we saw in April, and a second consecutive month of improvement if we continue to go in this direction. And that'll be sort of the barometer on what the consumer is actually doing, because going back to the GDP numbers here, we can see all of this tariff front-running aside, consumption was the weakest it has been since the second quarter of 2023, so almost 2 years. And consumption is really what matters. It is 68.5, give or take, percent of GDP. Everything else is kind of an afterthought. So if we really want to see what's going on here, this is the part of the equation that matters. And we can already see the fragility. The composite index for the world economy as of April was at its weakest in 17 months, going back here to early 20 or late 2023, right here. So over a year. And what we're seeing then is a global economy that, with the deceleration in the US, is starting to decelerate more broadly. And of course, since the global economy, as we've said a lot of times here on the show, is mainly made up of three economies generating demand and the remainder acting basically as vendors to the former three, what happens in these three really is critical. Now, we just saw China is at standstill. The U.S. has basically ground back toward standstill. We can see that here. There's this little bit of a pop more recently, but if we take a look at the way that this might work out here now, with manufacturing going into a deeper slump and maybe an uptick, slight uptick in services, perhaps the center line to all of this, since services is a bigger part of the economy, is something along the lines of about 50, give or take, on what would be a composite, a weighted composite, so near standstill on the U.S. economy. And since we'd be remiss to skip the Eurozone, which is another big part of this equation. We can see that for the Eurozone, not only are we through standstill, but we're actually having that economy fully in contraction mode, both manufacturing and services now posting sub 50 readings, and the composite likewise, of course, by extension. So all of this now looking like contraction. Then the question becomes, well, just how far away are you from a global recession? If this is the whole of the world economy, and the trend in China is doing this, and in the best case is just stuck, depending on which version you look at, and if the version in the Eurozone is doing this, is to say it is already in contraction mode, well, then what you're left with is this, the US, and there it seems like the story is increasingly, assuming these expectations hold, flatline. And if that's the case, well, then where is growth supposed to come from? And the upshot seems to be, if this continues to develop as we're looking, well, then a global recession becomes essentially inescapable. There's just nowhere else to go. And so despite the fact that we're still seeing stocks hovering at meaningfully elevated levels, we still don't have a level of runaway panic in the markets, although the dollar has certainly shown quite a bit of weakness, and that weakness has been really relentless since the beginning of the year, despite sort of corrections in other markets. As we look at all of this, and the S&P is hovering near the peaks it set back mid-May, which were the highest levels since late February, early March, despite the sort of supposed and would-be optimism that's showing up on Wall Street, the architecture of what's going on is increasingly troubling. And as more and more data comes in to paint that picture, it seems a matter of time and not a matter of direction for when the markets begin to seriously wonder what all of this means for earnings, how all of this probably means lower rates and higher bonds, how the dollar is probably not done falling as the screaming out from markets for the Fed to cut rates despite its resistance grows louder, and how gold may continue to power upward against the backdrop shaping up. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be on with Victor Jones for The Price of Truth tomorrow. Chris will be there today, so definitely check that out. I'll be back with Chris for Futures Power Hour on Friday. Back with Victor and Tom for First Call on Sunday, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I got interested in trading when I was around 18 years old. There was a conference downtown and they just kind of described the very beginning of the market. It pretty much would say 99.9% of everything was stuff that wasn't covered in school, just how to leverage your investments, even with options, and that was just really attractive to me. I understand that no one can for sure predict if the market is going to go up or down, but with the research that Tasty does, we're able to find those optimal numbers to trade around to put ourselves in the best situations. One thing people can expect to see with my trades is just a very raw learning process, someone just really getting into the market, but really applying the correct principles and mechanics to a very non-emotional approach, just trading by the book, just to have an inside look on how it really is for someone getting into the market.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap. How was Nashville? Did you go hiking? You were gonna do a bike, you were gonna go fishing, and you were gonna visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
I wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down, telling Corinne this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday, second day into the week. We got a little bit of a different segment. We're going to be ranking some of our Mag 7 stocks, so we'll get into that here in a little bit. But before we do that, Gus, how we doing, brother?
Doing well, man. Hanging in. Yeah, nice little green day in the market. Things are moving the right way. It's finally warmed up a little bit here in Chicago, although it's about to dip a little bit again tomorrow. But we've had 2 days in the 80s here, so pleased with that. I was just sitting out on the balcony before the stream. I will say though, it's cold as hell in this office today. And I guarantee you, the prod team is out there chuckling right now because it is freezing. It is freezing in here. We've all been taking little trips outside to warm up for a second. So it's been a fun one.
That's a little backwards. We're going outside to get warm now. So, no, I love it. I love it. Good start to the week. I mean, a little bit of green on the day, but I mean, some of the swing positions, those still got a lot of time. We'll get into that here in a little bit. But, I mean, the market's just been insane today. I know we had an insane rally out of the gate, and then we had sold off a little bit. But it's looking like the market still wants to shoot higher. So, I mean, it's going to be an interesting week. I know we got some other red folder news to hit later on this week. So we'll see what we get. Other than that, I mean, excuse me. The first day of hurricane season was just a couple of days ago. And I mean, we got a ton of, let me sip on this real quick. Give me 2 seconds.
Got to get right. Got to lock in.
Excuse me. I know. No, I was going to say, I had woken up the first day of hurricane season. And I mean, things are almost, it feels like everything's blown over. A ton of rain, ton of wind. So there you go. You know, what do we expect? Nothing less. So other than that, though, as for the market, again, we'll get into that here in a little bit. We're going to be going through some of these Mag 7s. Do you have a preferred Mag 7? I know Tesla's on your no trade list, but do you have a preferred individual underlying?
Tesla is on my no trade list, but it is not on my no hold list, which we will get into in a little bit here. But yeah, I don't know. I think I like Amazon. I mean, it would have to be, in terms of like products that I legitimately use on a day-to-day basis, it would be Amazon or Apple. I mean, I love my iPhone. Obviously, that's my most used product probably of all time. But I like Amazon. I like what they got going on. We'll get into it in some more depth here in a minute. But I'm an Amazon bull, I would say.
I really like Amazon too. And I remember growing up ordering off of Amazon before Amazon was what we know of it today. But I remember ordering a green, I don't know if you remember these or anybody else, but those Game Boy phone cases. Do you remember those?
I mean, like it went on your phone and made the back look like a Game Boy. Yes.
When I was in middle school, they were so popular. I remember that was one of the first items I ordered on Amazon. I thought Amazon was really cool is because you could order unique items, like items that I didn't really see in a store. And because there was an online catalog I could sift through, I was like, yo, they have almost anything I could think of, a something phone case, and it would pop up. And I was like, yo, this is crazy. So, you know, I would be rocking with Amazon too. But I think I'm going to have to go with, out of the 7, I think I'm going to have to go with Apple. I think I would roll with Apple. Apple, something that I use probably most all-time used device too. So I'm on the same end there, but you want to touch on a little bit about these Mag 7s that we're about to get into? What we got going on today?
Yeah, we're gonna be making a tier list. We're gonna go Mag 7 tier list. We are ranking these stocks based on how we think they are going to perform in the coming week. There may be more nuance that comes into the rankings than that, but that's the general idea, is how we think that these things are gonna do in the coming week. Shout out to tiermaker.com, always coming through clutch. I'm happy I have my account from the last time I made a tier list because I was able to sign right in and make this one. But yeah, so for those not familiar, tier list, S tier is the best, F tier is the worst. Do not let the colors confuse you. And we're just going to be, ranking these based on how we think they're going to perform in the coming week, maybe month. But we're trying to keep this a little bit short term.
I think it's only right. We got to start with Tesla. Excuse me. I know there's a lot of mixed emotion about Tesla, a lot of opinions on Tesla. So I think it's only right we go with Tesla first. But out of these, what is this? 1, 2, 3, 4, 5, 6 columns or rows. Where could we put Tesla?
Yeah. This one's a really tricky one. It's obviously the most divisive stock on the list. I think it's a good place to start. It's in a weird spot. It's kind of tough to nail down. They've missed earnings estimates in 2 straight quarters, and they're still very far from all-time highs. All-time highs around 488. And Elon may have alienated a lot of the American population with his outspoken support of participation in the Trump campaign and the presidency. But with all of that said, by the numbers, actually kind of bullish on Tesla right now. Elon is done with Doge. He's fully rejoined the company. They have solid production systems in America, which are only expanding, should help to lessen their tariff burden. The robotaxi service in Austin rolls out this month. The Model 3 and Model Y, actually was just seeing this. It slipped through the cracks on me, but they got good government subsidies in China. They're trying to make a push in China to get EVs into rural areas, and the Model 3 and Model Y were chosen to be the main components of this push. So they got some subsidies on those. And to top it all off, in Q1, they reported 27.7% year-over-year earnings growth. So
I mean,
did it even really hurt at all? It's very, very interesting situation that we have here.
I mean, you can't beat that. You can't beat that. I mean, long term, personally, I am bullish on Tesla. In the short term, within the next week or the next month, I probably still lean a little bullish. I know I was even looking at some other EV companies today, and some of them kind of sitting on their butt. What happened to Rivian? Rivian's trading like a penny stock right now. It's at like $2 and some change. So a lot of these other EV companies, sitting at their lows too, and I'm bullish on the overall sector. So relative to where they've been over the last few months, especially this year, I'm going to be bullish Tesla. So we'll rank Tesla. This is the tough part. It's like, where do we rank Tesla?
Well, yeah, and it's tough to do these rankings too, because obviously, like, it's the Mag 7. Like, you're not going to ever be too low on a Mag 7 stock. Right. So, you would kind of have to really be aggressive here. In the short term, I don't know. I feel like Tesla is like B tier. I think the
that's
case.
Good. That's a safe. That's like 1 out of 10. That's like choosing 7.
It is. Everybody picks 7. It's true. Yeah. But yeah, just nice safe option. Also, if you ask people to pick a number 1 or 2, they'll choose 2 like all the time. That's something I've discovered.
Really? Is that a thing?
In my experience? Yes. You guys want to go out there and test
data?
that?
Can you send over that peer-reviewed study for me?
Yeah. I'll get you the Excel doc right after we're off here.
Appreciate it.
But yeah, B tier just feels pretty safe. I could see arguments for A and C, but I feel like it just lies in the middle.
Well, I would argue I think B is a good tier for Tesla because Tesla's so volatile. I mean, your opinion on an outlook on Tesla could change from 1 week to the other. If you're a trader, if you're not looking at these fundamentals right here. But next up, let's just go right to NVIDIA. I do have an NVIDIA position on right now. NVIDIA was screaming to the upside. It was getting really beaten down after the hype we've had over the last couple of years on those semiconductors. So I'm short right now in NVIDIA. I had 2 positions where I've gotten short on them. I shorted NVIDIA after the earnings. That one, actually, I was short on NVIDIA. We had a massive move to the upside. NVIDIA ended up selling back off, and somehow I got out of that one break even, Gus. But I do still have my longer term short position on NVIDIA. And NVIDIA has been beaten down and has more of a short term pop, depending on how you look at it. So I would put NVIDIA S tier. For me at least. But what do you see from NVIDIA, Gus?
No, I agree. I mean, I think NVIDIA just kind of has to be instant S tier in the modern age. It's too hard to ignore. I mean, if you just at any given point walked up to me and put a gun in my head and said, you got to trade NVIDIA right now, I would very seldom be putting on a short trade in that situation, especially if I had to hold it for longer than, say, a week. And yeah, let me forget my notes here. Oh, yeah. NVIDIA officially passed Microsoft today to become the most valuable company in the world. That happened right before close. So big ups for NVIDIA on that front. Very close to their all-time highs of 153. Biggest player in the AI space by a wide margin. They're making a $500 million investment in America. That should help lessen tariffs in the long run there. And yeah, I mean, NVIDIA is AI. They are interchangeable. They're the dominant force in this emerging market. It's got to be S tier.
Yeah, I like it. I think. Oh, whoops, wrong tier. S and C. Am I dyslexia? What is that? S and C. I meant Microsoft. Good old Microsoft. I grew up on Microsoft. Just knowing of Bill Gates, really, and then loving Xbox. So I was a fan early on. This isn't an asset that I trade too often. I would say still one of those, solid premiums. Usually is very liquid, high volume traded on that underlying. But for Microsoft short term, I'm going to be leaning a little bearish too. Again, I don't want to go too bearish on everything. I'm leaning a little bit more bearish on Tesla, but in the short term, I'm going to go a little bullish on Microsoft. Microsoft has also experienced a lot of that rally the overall market experienced too. So I'm going to kind of rock with it as if I was trading something like a SPY or QQQ. So I'm going to learn a little short term bearish on Microsoft.
Yeah, I kind of feel the same way. Microsoft is actually an interesting spot. It's made the best recovery of all of these Mag 7 companies out of the Liberation Day lows. They're pretty much back at their all-time highs. All-time high is 469, and it closed today 463. So we're right there. That's marginal percentage points. And they've cut 6,300 jobs this year to free up some capital, move their investments into AI, and the market seems to think that that's the right decision. And also, we talk about this all the time. Azure Cloud, man, this thing is a quiet cash cow that Microsoft just always has going. The cloud services, no one talks about cloud services enough. Constantly propping up their revenue. So yeah, capital expenditures last quarter were up 50% year over year. They're investing in themselves, and they still managed to beat expectations even in the midst of spending a lot more money. So yeah, I'm liking Microsoft. I'm bullish on Microsoft. However, in the short term, as we approach this all-time high, somebody said it in chat the other day, all-time highs tend to bring on all-time resistance. So we might get a little bit of a bounce we might come back down a little bit off those highs if we go test that 469 level. I don't know. This one's tough to kind of analyze in a short-term context. I don't know. I would say I lean a little bullish, but this is like a C tier to me in the immediate. I think that's again, we are ranking all of these based on what we think they will do in the next week/month. This is very, very short term. Obviously, these are all great, solid companies.
You know what's really interesting? Like this tier right here is like the safe tier, and this almost looks like it's turning out to be a little bit of a distribution curve. I don't know if you've ever checked out like the weights at a gym, but you can kind of see these distribution curves everywhere. Like even on the weights, you can kind of see where you put in that pin to change the weight. Sometimes you could see fading on it, right, and it looks like a distribution curve. It's like one standard deviation is most active, and then we have less fading on the weights the further you go out. But it's kind of starting to look like this is where we're getting at so far. Guys, I'll be interested to see where we choose these next four.
I do think we had a nice bell curve on our first one. I always the distribution curve that I like is the cyclists. If you've ever seen like a bike race, they will form a distribution curve like with the leader and the person at the back. It's interesting. There's always cool pictures of that.
I never realized that until you brought it up just now.
Love a standard normal distribution. You can do all kinds of things with it. Anyway,
love them.
What do you want to do next?
I think we'll just keep going on to the left. I think we'll go with Meta. I know Meta is another one where I know a lot of these, not really fully correlated, but I know a lot of these will move dependent on what the overall market is going to do anyways. So it kind of puts us in a little bit of a tough spot too. But with Meta, I think I'm feeling a little bit more S tier. I'm kind of in the same boat as Microsoft, not to double up back to back, but I'm in the same boat as Microsoft.
Do you mean C tier?
I hope I mean C tier. Yeah, no, I do mean C tier on this one.
Okay.
First standard deviation on this one for me. And then I don't know where you're at with Meta, but we'll kind of find a middle ground. But with Meta, I'm in the same boat as Microsoft. Short-term rally after the larger rally we've really seen as well. So I would be a little short-term bearish on Meta. And I know the next we have Google. I'm kind of screen peeking right now. I know we got Google next. I'm trying to think of
I'll say I'm higher on Meta than that. It's been such a cataclysmic recovery out of the Liberation Day lows, and I mean the velocity at which Meta is moving upward is really something. That does make it difficult in a short-term context. That momentum has to stop sometime, but I like Meta a lot. I don't know. I guess
you're feeling like an A tier, huh? That's the vibe I'm getting.
Yeah, I was gonna say we can meet in the middle at B, but yeah, I was thinking A tier. That's what I have written down here. Is that I was gonna go A tier.
B, though.
Meta also,
I'm telling you.
Meta also just won a lawsuit today in Florida, which was trying to keep users under 14 years old from signing up on Meta platforms. So that's an interesting one. Might give them a little tiny bump.
What was that age range again?
Under 14. It was the Florida government was trying to prevent people under 14 from signing up on Meta platforms, which honestly I kind of agree with. I think social media is kind of destroying children, but that is good for Meta.
And to that point, I don't know when you first got a Facebook, but I remember the first time that I got one. I was 12 years old. I was in 6th grade. I remember I got one. This is when people were doing like the rates and like to be honest, and it was just like community. Like the first time you had community with your peers, right? We're 12 years old, and I remember after a few weeks, I'm like, yo, I really don't want one of my parents to figure out that I got a Facebook without at least letting them know. So I texted my dad. I was like, yo, Dad, is it okay if I get a Facebook? And he's just like, yeah, son. So I was kind of like, even at that age, knowing in the back of my head, like, because I have access to the world like this on Facebook now, like maybe they might want to know I'm at least online. Even knowing that as a 12-year-old, I knew the possibilities of the internet before it was even as developed as we know social media is today. For me to even have, that inkling in the back of my head, like, I don't want to get in trouble. That means I know something could be out there that I could be vulnerable to. You know what I mean?
Yeah. And I think that they did a much better job of educating us like in school on like cybersecurity and how to be safe on the internet and stranger danger and all these things. And it was because the internet was like a new novel thing, and you can go back and find some pretty funny like anti-kids on the internet ads that have not aged well. But holistically, that was a very good point, and I don't think kids are being taught these things in school anymore. And I don't know, it's concerning. It's concerning.
No, 100%.
But
we got Google now.
Yeah.
Google, I haven't traded, it's been a little while since I traded Google. I think you might have brought it up not too long ago, if I'm not mistaken.
Yes, I do have some Google on expiring Friday for should be max profit, barring I don't know, a CEO getting assassinated or something. It would take something like that.
Yeah. I know you're sitting pretty on that position right there. But with Google, again, Google's one of those that I'm extremely bullish on long term for the most part. All the Mag 7 stocks. I mean, Tesla, very bullish on that. That's the only one that I would feel a little bit more hesitant on. But I mean, Google's one of those big dogs in the space too. And Google's another one that had another pretty significant rebound after the significant sell-off. But I am a little bit more short-term. I'm not as short-term bearish on something like Google. Per se the other one, just because Google's a little bit of a slower mover than something like Meta and Tesla and Microsoft, in my experience at least, especially NVIDIA. So from a technical point of view, I would still be shorting. I would still be sitting a little bearish, but not as aggressive like some of these other underlyings we threw up there.
Certainly, yeah. Google, it is definitely a bit of a slower mover. It likes to find channels. That was actually one of my very first trading strategies I ever developed when I was 18. Was I figured out that Google liked to channel, and so I would trade it up and down in those channels. To JDD in chat, Microsoft below Tesla. If you haven't been here the whole time, we're ranking these based on the next week or month. This is not a long-term thesis. But yeah, Google still very far from their all-time high of 207, and this is just Google's interesting. I feel like Google could almost get squeezed out a little bit here and maybe find themselves moving down the Mag 7 ranks further, primarily because I think that these concerns surrounding Google losing search engine ad revenue to AI chatbots are very real. Yes, and that's a major segment of their revenue. And I mean, I'm part of it. I go to ChatGPT all the time now to ask things. It's the app I will open on my phone when I want to look something up. If it's not something super quick, if it's something that I know Google, who is X person or somebody's age or whatever, I'll fire that into Google. But if I have a question with any remote level of nuance or levels to it, I'm choosing to use ChatGPT. I think that's only going to continue. Also, Google Gemini has 2% of the world market share on AI chatbots. So I worry about Google a little bit in the longer term. Not to say I'm bearish on it in the longer term. I just think that it could be a slower advancer. But in the short term, they've had, I don't know, it's been a nice little run here. Not seeing any gaps that I feel like need filled to the downside. So yeah, I don't know. This is kind of equal to Microsoft to me in the short term.
I feel you. Where are you leaning towards? What are you eyeing?
I don't know. What do you think? I'm thinking BC, it's right in there.
Yeah, I know. I don't want the psychology to mess me up, but every time I'm looking, I can just see that distribution on the 1 standard deviation building out around that BC area. But in terms of that, I would lean a little bit more C. If we go BC area, I'm leaning a little bit more C on that one. How are we feeling?
I'm inclined to agree. I mean, Google and Microsoft, I feel like they have a lot of similarities in a market context. They're both just these really institutional, way too big to fail, kind of slow movers. You're not going to find a ton of chop intraday. So yeah, that's about where I would be comfortable putting it.
Yeah, 100%. I would say out of all of these sevens, I probably have the most trading activity on something like Apple. Apple, another one, really good premiums, really solid volume, always really liquid. And Apple's another pretty quick mover. It's not as volatile as something like Tesla, but I am bearish right now on Apple as well. So with this one, I'm actually would automatically put it up at the A tier. I don't know where you stand on Apple, if that one's surprising you a little bit there, but I was saving Apple for that A tier. I was being patient on that one.
Oh, that's funny. I'm Apple. It's just, I don't know. They've kind of just been stagnating. I feel like they've had a hard time getting out from these lows.
I got to justify this. Something's brewing.
It's just, yeah, I don't know. They do have a WWDC coming up. I believe the 9th. It's like the 9th to the 13th or something. There's going to be an overhaul to Siri coming with that. They took a dip a few months ago when they had to, I guess it was in April, they had to delay a new Siri rollout that's going to incorporate the Apple Intelligence. Which, and especially as it pertains to this comment, talking about how you can just ask your phone things directly if you have an Android and get a reliable answer. Siri is a decade behind. I don't know how they haven't made any improvements to Siri for so long.
And they were ahead.
Yeah.
Siri was ahead of it, and now it's in last place. I don't know how that happened.
Insane that they've let this happen. But yeah, I don't know. Short term, I don't know. I guess it's got a little bit of room. It's just I want to put Amazon in the A tier if we're saving that. Amazon. I'm going to be high on Amazon.
Okay, cool. No, I think that's fair. I think it's also fair for us to kind of
Well, yeah, I mean, we're supposed to disagree on these things. Yeah, it's.
I know.
I don't know. Apple, it's just honestly, like, of all these stocks in the next week, I might be the least confident about Apple. I mean, it's just been running sideways for so long, and I know damn well because I have a 210 call that I put on as risk of the week like 2 or 3 weeks ago, and this thing won't move. It doesn't move. It doesn't go anywhere. So I don't know. It's been frustrating the hell out of me. So I guess I'm maybe a little angry
right
with
off
Apple.
the bat. Right off the bat, what are your thoughts on Amazon? Because I know we're going to throw this one up to the 8s here right off the bat. So what are our thoughts on Amazon before we throw Apple in there?
Love Amazon, and I love Amazon because they are. I was just reading. Yeah, they in their Q4 2024 earnings, they only had 61% of their revenue coming from Amazon.com, and that was at 86% the previous quarter. So quarter by quarter, they are really finding a way to chop it down into these different revenue streams and diversifying into AI, and they have cloud services as well. And it's also just been a better mover in recent weeks to me. So yeah, I don't know. That's where I'm at on Amazon. I mean,
I like it.
Yeah.
I mean, as long as NVIDIA and Amazon is in the S and A tier, I feel really comfortable with it. Other than that, Apple has been a little slow. I will admit, Apple has been a little slow, but when Apple moves, Apple can really move. So because Apple has been a little slower lately, we'll just go ahead and put that in the D list. I know you're feeling that D and F list, but I don't think anything is fitting for F at least.
Oh, I don't even think we need it that low. I'd be comfortable putting it in like B or C, especially if you think A. Like we can meet in the middle on this a little bit. Sofo's saying D for Apple in the chat.
We'll meet in the middle. I mean, we got a little bit more input there, so I think C is feeling pretty comfortable.
Yeah, I'm good with C.
Awesome. So there we have it. There's our Mag 7 rankings for the day. I got to just show you. I put on a position on Lulu today. Lulu's been popping to the upside. I feel I'm trading the same underlying, just a different member of the family a lot of the times when a lot of these are so correlated, but ended up getting short on Lulu, sold in out of the money call spread. We have earnings on Lulu after the bell June 5th. So I'm going to be sitting through that earnings. I pray we get a move to the downside. I still don't own any Lulu, so it's only right that I get short. I don't have anything against it though.
I own one pair of Lulu shorts, and they are way too big. It was a birthday gift from an ex-girlfriend, and I didn't want to tell her that I didn't like them or something. I don't know. I still have them. I don't know if I've ever worn them out in public.
She was telling you to hit leg day, bro.
No, it's the inseam. It's the inseam. It's not the that's not the problem. It's just they're like. It looks like it's 2008 out here. I got basketball shorts hanging below my knees,
I know exactly what you're talking about. I mean, other than that, before we wrap here, SPY position, still have 17 days left till expiration. Need a downside move there. We got QQQ. We sold a call spread in QQQ. This one's actually a really interesting position. So I sold an iron condor at the beginning of the week, right? The market now ripped to the upside. Initially, I was like, you know what? I'm going to try just, taking off that call spread, let it keep running to the upside because I was very overall bullish. And then as we ripped to the upside, I was like, I'm going to leave it on. The market kept ripping to the upside. I was like, this would be crazy if we pull back within this range. It is a shorter time window that I do have on this trade. This expires at the end of the week. So I need the market to stay below 325 for the calls. And then I need the market to stay above 515 for the puts. So I have a very narrow range, but if we drop in that range, any time within the next few days, I'm going to be out of that position right away. So hopefully we get a pullback. I think it's justified after the rally we saw today. But I mean, this rally overall is just surprising me that we keep heading to the upside. So the market will do whatever the market wants to do. And then NVIDIA, still in that longer term position. 17 days left, not much I can do in there. Then we got the Lulu on today. And then we have the Disney. I bought the put on Disney about a week and a half ago, and then we've just been consolidating. I know we can take a quick look at Apple before we head out of here, but no, I know Apple's just kind of been chopping around. But whenever Apple does move to the downside, I mean, good Lord, it definitely puts in some downside moves, and it kind of grinds higher there. So we'll see if we get anything else to add before we head on out of here today.
I know. I really don't have anything else. This Apple chart is the perfect example of stairs up, elevator down, like we talk about all the time. It's
100%.
Yeah. Oh yeah, and I do. Nice. Yeah, I'm always long VIX. Fortunately, this is a 17 call that I have on VIX, so I'm still well in the money, pretty much exactly at break even, despite like the $3 downward move since I bought, which is quite something.
If anything, that's giving me more conviction for the pop, downward move.
Yeah, What happened the last time the VIX was at 17?
Exactly.
You can see it right
here. But that's going to do it for today. Ranking these Mag 7s. we'll see what we get for the rest of the market. We will be back here on Thursday at 4:30 Central Time, so come hang out with us. Thanks for taking the time to tune in with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a fishing area. He hands me a fishing pole, you know, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
I wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down, telling Corinne this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you gotta move quickly.
I like how you're clutching your pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road for
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating stuff.
That is like crack for me.
There's like barbecue sauce flying all over the place. That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the tasty people?
I probably guess I got to go Ilya.
Ryan Grace, easily.
Oh,
yeah, Ryan Grace, 100%.
He's very preppy looking. It doesn't do anything for me.
Oh, who's the guy? Who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah.
He throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible.
Jim wears children's clothes. It's easy for him to dress.
This is easy.
Like Granimals.
Yeah.
You can throw me outside. No, don't worry about it.
Oh, I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
All right, Mike, we have earnings coming up next week in a time of high volatility and a lot of uncertainty. What advice would you give to traders in terms of attacking earnings in a time like this?
It's a great question. I think every so often we have this pocket of time where everyone is talking about the same thing. Or when Bitcoin and crypto came out, we had Radio Shack talking about it. We had a coffee roasting company talking about it. Now I think you're going to hear a lot of tariff implications. So there's going to be a lot more heightened implied volatility in that weekly cycle where earnings are. Just doing your due diligence, have an understanding of what might impact the company you're trying to trade and how potential tariffs might impact that.
And what would you say your earnings checklist is? What criteria do you look for in a company if you're going to try to make a play on earnings?
You have to be really small. Even when you have a super strong assumption, you can be really wrong with earnings. The options market's closed when the earnings come out. You can't adjust unless you're hedging with stock, which I would say maybe size down more than you normally would. Stay defined risk. Just because a company reports good earnings numbers doesn't mean the stock is going to go up. Just be prepared for a lot of uncertainty.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Yeah, it is Tuesday, June 3rd, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's Eat Me Show, a little podcast. A little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And we got some more to chew on, more on that in just a bit. Before we get there, let's introduce our switcheroo guest for this Tuesday, June 3rd. I'm talking, of course, look at that. Look at that. I just caught that bushel of chest hair in my face as it popped up on the monitor. We have with us, what's that guy's name? Oh, we have with us Tom Selleck's New Age spawn. I'm talking, of course, Chris Vecchio. Chris, how you doing, my friend?
I usually make a Tom Selleck reference when I'm talking about people's like mustache or something. Yeah.
Yeah, he was a hairy guy. I think it's an all-purpose reference in my world.
You've seen the mustache once. It did not go over well in this household.
When did you? I can't remember. When did you do it?
During COVID. I grew up my hair shoulder length.
That's right.
And had a mustache. My wife hated it. Let me tell you, I was not a fan.
I do remember, actually. How's it going, my friend? You good?
It's going well. It's going well. You know, I'm a little upset about my Knicks. Tibbs was fired today.
Get over it.
Yeah, exactly.
Yeah, I saw Mayor Adams send like some sort of message to him, basically like a thank you, Coach Tibbs. And I'm just like, bro, these people, why do you think you have the time to send a farewell message to Tom Thibodeau, Mayor Adams?
I saw in the New York Post that Mayor Adams' son he dropped his new party music inspired by his journey through rap in Albania. That was one of the top stories in the New York Post today.
Clown world. If I was writing a newspaper, my friend, like the old school newsies, you know, the title of today would be Clown World. And if anyone cared about this show and actually posted it to YouTube, that would be the description of the show. It would just be Tuesday, June 3rd, Clown World strikes back. Clown World Empire strikes back. Return of the Jedi. That's what today's description would be.
Okay, like as a Star Wars guy, you've really pissed me off with this ham-fisted analogy. But I do want to talk about Clown World, so why don't you get through your open?
No, before we get there, you want to know what's going to make you even more angry? Was that the cat? Never seen a single Star Wars.
That doesn't make me angry.
Really?
Yeah. I honestly, you know, I think the most recent show, Andor, seasons 1, 2, and Rogue One might be the best Star Wars trilogy now. But what I particularly enjoy is that the last 3 episodes of season 2 of Andor, you can watch synchronously with Rogue One and then A New Hope, the original Star Wars movie, as one like 6.5 hour block of a single story. It's really well done. It makes actually
what did you even just say? I didn't even know what you just said, bro.
I'm operating up here. You're all the way down here.
Hey, that's what you think, my friend. That's what you think. You spent a lifetime watching. Listen, you spent a lifetime watching Star Wars, and you think you're operating at a higher level because of that?
Because I'm slinging ES futures, watching Andor on my second screen here at 11:30 at night while my pregnant wife
Guaranteed
sleeps.
You're not. When did you start slanging? When did you start slanging ES futures?
Very small lots. I didn't say I was doing it successfully, Victor. I just said I was.
Oh, I love that. That, my friends, is the cold open. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. But if you want to be part of the chat that's in the middle of your screen, my friends, there's only one place to do it. That's on the evil Tasty Live YouTube channel. Yeah, I messed that up, but I think that was right as well. The evil Google's YouTube. So head on over there to the Tasty Live YouTube channel, subscribe to the channel, and all your thoughts, both appropriate and inappropriate, will be streamed in the middle of the screen. Shout out to everybody that's already in the chat. You know I would shout you out individually if I could, but we got the big brain with us. That means we got work to do. Christopher Vecchio, the S&P 500 up a little bit more than 0.5%. The NASDAQ was up 0.4%. The Dow Jones up 0.5%. And the Russell up 1 2/3% nearly. And what everybody's going to start squawking about is the rally is broadening out. The rally is broad. That's what always happens when the Russell starts to outperform. My good friend Chris Vecchio, what gives? That's going to be my opening question. What gives?
That's a good question. Yesterday, I was perplexed by the divergence in price to action, the juxtaposition you saw between equities and basically everything else, where it was pretty clearly a sell America day otherwise. Bonds down, gold up, dollar down. But stocks, they are usually the last kid in class to get the memo, right? Today, it seems like maybe they weren't because everything else kind of rebounded back in line. And so just checking my little thematic scoreboard here, when I see the Russell outperforming the NASDAQ and stocks are up generally, oil's up, bond yields aren't really doing anything whatsoever, but they were higher earlier points in the session. Gold lower, dollar up. That kind of seems like a really growth positive session, Victor. It has some really nice contours to it. And then you look at the sector performance, and sure, energy is leading the top of the pile, XOP, OIH, XLE, but then you have names like SMH and XRT, the retail ETF, a retail ETF that was beleaguered and beaten down for much of this year, was hit hardest on the other side of the recession fears percolating in February, March, was hit hardest during the tariff drawdown in April, has now broken back through the areas where it was trading prior to February 21st, when we had those bad PMIs and the growth scare begin to iterate across a number of asset classes. So today, maybe it was Taco Tuesday. We get the 50% tariffs on aluminum and steel signed because, according to Trump in his executive order, quote, although the previously imposed steel and aluminum tariffs have helped provide critical price support in the United States market, they have not yet enabled these industries to develop and maintain the rates of capacity production utilization that are necessary for the industry's sustained health and for projected national defense needs. Too long didn't read. The last tariffs didn't work, so we're going to do more of them. We signed that today. The market doesn't seem to care. This is a Taco Tuesday that Trump is doing these things. He'll eventually back off. Don't fade this right now. I find it shocking that this is where we are, and yet this is where we are. So we have to trade the market in front of us and not the one that we think we should be in.
So in all that open, no part of what you see is in any way related to what seems like, to that big, beautiful monstrosity of a uniparty, stranglehold on the U.S. Treasury. Not related at all. That's not in your open at all. The total clown world shit show we've got going on in D.C., where even Schumer comes out today and he quote tweets Elon Musk. Elon Musk says, this bill is a big monstrosity. I'm sure he believes so because he is a defense contractor, is going to benefit from some aspects of this, even though Tesla is not. But the other pocket in his genes is. But Schumer quote tweets him and says, I can't believe I'm going to say this. I agree with Elon Musk. So all of a sudden, I had no idea, Christopher Vecchio, but apparently Chuck Schumer is a deficit hawk all of a sudden, and he cares about gigantic amounts of pork in a bill. What say you about the total clown show happening in D.C. right now?
Welcome back to the resistance, Elon Musk. Welcome back. We've been waiting for you. We buy your cars. Come on, come back on board. No, Victor. I mean,
so
Musk
to be
went
clear,
out. Musk,
no, let's
Musk
no,
went
no,
out.
no, let's stay,
Musk
no,
went
no,
out.
let's stay there. Let's stay there. What you're saying is that Democrats are the resistance, and that they are the fiscal conservatives of the two-party system right now. Is that what you're saying? The resistance is the Democrats who are opposing this wasteful spending.
Oh, yeah. If we want to go into the actual dollars and cents, Democrats over time have run smaller budget deficits than Republicans. Administration after administration have added less to the debt year after year. They are.
Jesus Christ, bro. You serious with this? Are you serious with this?
Why do you think Rand Paul and Thomas Massey and Elon Musk are saying the things they're saying? Because the talk of being fiscally hawkish.
Which one of those three you just mentioned is a Democrat?
None of them are. None of them are really Republicans.
So what are you talking about? Welcome to the resistance is who? That's all I'm asking.
Because it's a joke. That's the whole bit of me saying I'm just kidding, right? Like the reality of this is that Elon Musk legitimately set off into government thinking that he could shrink deficits and debts. And Doge was not that success. They didn't get the $2 trillion. They didn't get the $1 trillion. They got maybe 160 if you want to be generous with the accounting, but independent observers are saying it's probably closer to 80 to $100 billion saved. And so while he's putting his neck on the line, right, all these people are saying Elon Musk sacrificed so much for America. Look what happened to his popularity and his share price. Look what happened to Tesla's share price in recent months, right? It's been in the barrel. And it's all because of the arrows that he's taking on behalf of the American people to help bring forth Trump's agenda. Well, Elon Musk is seeing legislation that completely dwarfs this. I mean, I tweeted this out last week, Victor. The savings in the recent rounds of Doge cuts that Pete Hegseth, the Secretary of Defense, is touting right now.
You know he was just here in Singapore? Go ahead.
No.
I'll tell that story in a bit.
But like, so the defense budget for this fiscal year is like 810, 20, $30 billion.
It's going to $1 trillion.
It's going to $1 trillion. So all of the money saved by Doge is actually now completely offset by the increase in defense spending. And that does not account for the additional deficits and debts that are incurred for other programs, that are incurred for the tax cuts, yada, yada, yada. So, I mean, I understand why Elon's taking the position. It's not because he's a liberal or a Democrat again. It's because he put his neck on the line. He put his credentials and credibility on the line, trying to help fix what he views, correctly or incorrectly, depending upon where you sit, as an unsustainable trajectory for debt and deficits in the U.S. And using his name and brand image, this bill was effectively Trojan horsed in. And he's like, no, I'm not going to let this pass with my, I'm not going to condone this. You can't use the imprimatur of my name to say that I helped cut deficits while you pass a spending bill like this. I'm not going to allow it. And, that maybe that means something. There's already a lot of hesitation in the Senate to get this bill passed in its current form. You've heard it from Ron Johnson or John Thune. This is probably icing on the cake. So the process goes on. It goes on for many more weeks.
Does any part of you find it funny that as soon as Elon Musk says, I'm leaving government, I'm going to transition my way out of Doge, all of the hysteria around Elon Musk and Tesla completely disappears from the media, and all of a sudden his stock rises $100. Does any part of you find that in any way conspicuous, Christopher Vecchio? Remember, I was telling you
you think that I find that coincidental?
When he left, I go, well, you know what's going to happen now? All these articles are going to disappear from media, and people are now welcome to their own free will, which means people aren't going to be freaking out about Elon Musk anymore. And surprise.
The day that he had his exit interview with Trump on air, Forbes and the Wall Street Journal ran independent stories about his ketamine usage around the White House. So no, this isn't this, what's happening here is that the Trump administration is deliberately trying to, having worked on this before, they're trying to control the narrative by making Elon look like an unhinged weirdo who can't be trusted. So when he inevitably comes out and says, you're destroying my limited life's work in Doge by raising deficits and debts again, he's not going to have any credibility to push back. He was unhinged. He was always on drugs. That's why Doge didn't work out. So, I mean, I think Elon's fighting back here because he sees the PR battle that's being waged. And, I don't like this bill for many reasons. And Elon seems to be against it now, which I think is just for fantastic palace intrigue, if not nothing, because I can't see a single imprint on price action today in bonds, gold, stocks, that this story matters at all.
It already happened. What do you mean?
This is supposed to be the thing that Elon Musk uses.
Look at the commodity rally since this bill passed in the House.
No. I'm saying today's price action. The bill in its current form is probably not going to make its way through the Senate now.
I think it will. I mean, not in its exact form. Yeah, I think it's going to. What was the guy's name? I just made this joke yesterday. Who's the guy? Who's the Republican from Oklahoma with two first names? Mark Wayne something.
Mark Wayne Mullins.
Yes, I love to nothing tickles me more than two first names. It's my favorite. I think he was trying to float out there yesterday that the objective was to try to pass it in its current form. And I don't, even if, what can the Senate do, bro? What are they going to do? Cut it in half? No way. At best, they can get a quarter of this thing off. And that's still a monstrosity. This thing's going through. What do you think's going to happen? You think somebody's going to Joe Manchin this thing?
What Senate Republicans right now are in states that would be primary beneficiaries of a change in the state and local tax deductions?
I don't know.
See, there's an incentive for someone like my congressman, Mike Lawler, who took $1.7 million from Elon Musk and voted in favor of the bill that Elon Musk said he's no longer going to help people who voted for it. So hopefully this gets in front of Musk. Don't give Lawler that $1.7 million a cycle, please. Thank you. I would think that salt is on the chopping block. And if salt is on the, because listen, if you're a Senate Republican, right? What do you give a crap about this salt stuff? You never liked it in the first place. And so if you want to reduce the size of the bill, the changes in the salt deduction increase the deficit and the debts every single year. So get rid of salt, send it back to the House without the salt provision attached to it. But can it then pass there without the salt caucus of those New York and California and, Illinois red legislators, Republicans in those states who are using this basically as a cudgel to keep their purple seat? Right? So this is, I am interested in to see how where salt lands, because it tells me what the party cares about more. If they allow salt to remain in the bill, if they don't want to let deficits in their current form to go through, they're really concerned about the 2026 midterms. Right. But if they strip salt out of it, this bill is dead going back to the House. It will not pass in its current form. We're going to be in this barrel for months, which also means, Victor, we have the distinct pleasure of potentially passing a continuing resolution for Biden and Pelosi's debts and deficits.
Yeah, they're going to run. They're running this thing hot, man. It's so obvious, It's so the only thing I can't figure out is whether they were disingenuous at the outset about looking for cuts and trying to change the debt trajectory. I think that was an honest, let's swing at it. If we get a great outcome, good, great. It's a low probability. This whole chat had it at 30 delta of that strategy working, and that was the people that voted for and the people voted against. The whole chat said 30 delta, basically 20 to 30 delta. This thing works out, which I thought was fascinating. And
would you say would you say that's a correct assessment?
Yeah, that's what my number was. I said I'd always thought this was a gigantic gamble. I've said that at the very outset. I mean, the day one, I go, it is really easy to understate just how big of a gamble they just took. But and I kept trying to think to myself, well, what are the outs? What are the outs? What are the outs? And the outs on the left tail to me were always just print a shit ton of money or pass this monstrosity of a fiscal bill. And it seems, we hit a snag and they instantly went to just blowing up the deficits. And I said this yesterday. I'd like to get your quick take before I tell you my Pete Hegseth story. You know, to me, the Dems are just in complete disarray here, searching for a platform to run on, searching for a new leadership class.
They are.
And I don't see how you don't get to the end of the 4 years here in a post-Trump era where you're likely going to completely blow out the deficits. How do you get to the end of this and without the Republicans having to do the exact same thing? They're going to be in complete disarray because you have the fiscal conservatives that are just going to be pissed off. You've got the MAGA moms that aren't going to get dick except no red dye 40 in your foods. They're not going to touch the medicine part of this. You have the working class who are going to have to deal with a bunch of crazy inflation and no job prospects within 4 years, really. Well, I don't want to say that. Not to the extent being promised.
Victor, when you and I graduated college, we had a 10% unemployment rate. I'm going to do the old man yelling at crowds. I am so sick and tired of hearing people say that the economy right now is bad.
What was the employment participation rate when we graduated high school?
High school. I'm saying high school, college, global financial crisis. I'm out of college in 2011, right? You're a little bit older than me, right? But that's still like we're global financial crisis job entrance. And so to that point, the unemployment rate was 7, 8, 9, 10%. And everyone says the cost of living today is so high. At least it wasn't so high back then. What can you pay for without a job? So back then we had these things called internships where you would do an internship at like a Fortune 500 company and you wouldn't get paid for it. That's what did Cartman say in South Park? Oh, student athlete, right? Like, come on, like it's a different, like that doesn't exist these days. So like keep it in check.
When I graduated high school, the labor force participation, I'll do both. When I graduated high school, the labor force participation rate was like 66, 67%. It is now 62.6%. Here's my point. A lot of people throw around that unemployment number, and that's not what you think it is, bro. So yes, it spiked up to 10, it got into the double digits, and it never came back. And you know why it never came back? But politicians get to tout some low unemployment number. It's because after a year, if for whatever reason you're not able to re-enter at the same level you were before, the unemployment number forgets about your ass. You're too weak for us to care about anymore. So F you. It's your problem now. We're moving on. So that unemployment rate, bro, is talking about the people who are in the labor force. It has completely forgotten about the rest of those people. So I hear what you're saying on one aspect.
It's a fair critique.
On another aspect, I really do not like when people throw around the unemployment number without the context of the labor force participation rate, and everybody does it. This is, I want to say J.D. Vance was the only politician I've ever heard put two of them in context with each other. And I'm not putting him up on some pedestal, but I'm just saying he's the only politician I've ever heard reference the labor force participation rate alongside the unemployment rate. And I'm guessing, Chris Vecchio, that was coming into office, but I'm guessing we don't hear a lot of that context from this administration over the next 4 years. Let me tell you my Pete Hexa story.
Yes.
So once a year, we live pretty close to the Shangri-La Hotel here in Singapore. And once a year, the Ministry of Defense, MINDEF, puts on a conference called the Shangri-La Dialogues. It's basically a gigantic defense like conference or seminar. Last year, it has like big speakers. I think he wasn't the keynote, but last year, Vladimir Zelensky came in and delivered a special address to this crowd. I think Lloyd Austin was here, if I'm not mistaken. I can't remember. I think something like that. So what happens is they put up a bunch of security checkpoints, and last year they had like bomb sniffing dogs, stuff like that, all around the neighborhood. This year it was Pete Hegseth who was speaking. I think, and he delivered like this really long speech, which was really aggressive towards China. But Emmanuel Macron was the keynote speaker. I think he opened it up or something. Never in the several years I've been here, the security for this year's conference was absolutely insane. All the streets around the block around this thing were lined with security personnel we had to get in security checks to get on either side of our street, which is, mind you, it's a block away. Usually it's just on the block where this hotel is, but we had to go through security checkpoints, minimum of 45 minutes to get in and out of our street. They had to stop, search the car, do everything. And I thought to myself, like this is where we're like last year. There was a lot of security, but it wasn't crazy, you know. And this year, I feel like whatever my on the ground experience is, it's like it's a look into the next 12 months, how to think about defense. You get what I'm saying? Mm-hmm. Like this little conference is all the thought leaders for thinking about defense. And if they're kind of okay, they're not necessarily worried, which was kind of last year a little bit. So there was less defense. This year, it's crazy. There's crazy hawkish attitude towards this conference. And I'm like, well, that's a sign of things to come. That's probably not good. But did you listen to Pete Hegseth's speech at all? I'm betting you're not a masochist. You didn't do that to yourself.
I am. I've wasted a lifetime watching the Knicks and Star Wars, Victor.
What did you think about Palantir and they're scooping up all of the Americans' data, headed up to 135? Palantir the stock or the story?
Palantir the stock. Interesting. A lot of criticism for it over the years has been that basically it's a government contractor on steroids, and it is an AI name. It's one of the names that back in January and February when we were talking about moving into phase 2 AI away from selling the picks and shovels, which are the semiconductors, and moving more towards the gold rush, which would be the figurative application of AI moving forward. Palantir was one of the names in the list that we put out. So I'm not surprised that it's doing well because the AI names actually have been really, really strong here over the past few weeks, leading this market higher. Not just NVIDIA or Broadcom, but you see a name like Palantir moving to the upside as well. Microsoft has really been charging to the upside out of the blue too. Meta, Google's lagging, but that's probably for other reasons. I digress. It's a meme stock right now. It's in the thrall of the administration. Stocks, ETFs, meme coins, anything related to the Trump administration right now is catching some fire. So that seems like an animal spirits type of market, which is to say that it seems irrational. And I don't like engaging in irrational situations. So I'm not trading in and out of Palantir. I don't think that's how I want to approach it.
Yeah, I agree. I want to do something in here so bad. But it's basically like buy upside calls and hope to keep getting lucky or try to fade this thing. And I think fading it could be too painful. So you just have to wait. And I wish I wouldn't have punked out the last time we got back down. It wasn't necessarily I punked out. I just forgot. To pull the trigger on Palantir. This one, I've been waiting days to talk to you about this one. Hours, I should say. Silver broke 34 the other day, and I think had a pretty decent showing today because it looked like they wanted to give up about a third of that move back today, and it climbed its ass all the way back to nearly where we closed yesterday, 34.71.5. I think it was a pretty decent day on a snapback retest of 34. I think it's a good sign of things to come. I'm still long here. Famous last words. What do you think about that silver breakout above 34, man?
I don't want to say that I think you told me this, but I'm pretty sure you told me on first call this week that if silver breaks out, we're going to Sizzlers.
I'm telling you, it wasn't my best day of the year yesterday, but it was in the top 5. It was a great day yesterday for the good guys.
I think maybe bumped it up to Ruth Chris, perhaps. Away from Sizzlers.
It depends. In the U.S. or Singapore? 'Cause in Singapore, Ruth Chris has a nice premium. I think it's in the Marina Bay Sands Hotel, if I'm not mistaken.
Well, look, metals look great here. They have that resiliency. They have the narrative flexibility right now. If it's about the burgeoning implosion of U.S. debts and deficits or global M2 money supply increasing or U.S. money printing restarting, right? Pick your narrative. The metals are there. There's supply chain disruptions. The fundamentals really go unstated. The technicals are impressive, especially today. You see, or I should rather say for the Tuesday, June 3rd session. We're now technically in the Wednesday, June 4th future session. But for the Tuesday, June 3rd session, you see those long lower wicks in copper, in silver especially. Gold, not so much, but there's a sense of resiliency there, even as equities hold on to their gains. I think that makes all the sense in the world. We have Russia, Ukraine in the background right now with one of the most consequential attacks of the war thus far over the weekend. I think, again, as one of our tenets of gold and silver, in a post-sanctions world, which we are inevitably careening towards because even Trump himself is saying things like, Vladimir, stop, like some spurned lover. We find ourselves...
I swear to God, that did tickle me. That tweet tickled me. I was like, oh, it did sound like a scorn lover. Vlad, he used his first name.
Vladimir, stop. Please. And so, like, eventually there's going to be... You could see that Putin's trying to draw... so in my head, Putin's trying to draw this out. He's stringing Trump along. He's trying to make as much progress as he can before he eventually has to make the détente, like sign the truce, because Trump's going to lose patience and be like, oh, I guess everyone was right that Vlad really wanted the war and wasn't really for peace the whole time, right? So there's like a happy medium in there where Putin can push all the buttons and see how far he can test Trump. And we're clearly in that stage now. But let's get past that, right? Let's say the war ends, there's a truce, there's something. Trump pushes to end the sanctions. The EU doesn't want to get on board, but the US pushes anyway. Yep. Do we think that Russia is keeping any of that money in US or European banks? Absolutely not. They're going to put it into hard assets. So China is stockpiling gold. Still, their central bank continues to stockpile gold, even at these levels. There is a strong desire to have exposure away from fiat, not because of runaway inflation or debts and deficits, but because of control. And you don't want to have your assets denominated in a currency that if they decide you're no longer on the good guys team, you can't control them and you no longer have access to them. So that's the dollar dominance that people want to break away from. That's the U.S. hegemony that people don't like. Unfortunately, it's still here right now for those countries. And Russia, I think, will be buying as much gold, silver, copper, as will China, as will in North Korea, and get around sanctions, as will in Iran. Hell, even friendlies like Saudi Arabia or Israel, okay? These countries will want more non-US dollar FX reserves moving forward.
Bro, U.S. citizens, you can't keep a gold bar in Costco more than one day. I don't think it's not just BRICS, bro. It's everybody searching for protecting their purchasing power.
Gold has outperformed the S&P 500 since the millennia started, so there is that.
Yeah, my whole thing was on silver. I don't know what your I think you were more technical in nature for the way that you were looking at silver, which I appreciate. I tend not to look at the world that way, not because I don't think it has value. It's just like not my style. So I appreciate when I get to talk to somebody who has that point of view, because it helps to inform mine and either validate or invalidate my thinking and approach. But I think like my whole thing was, if the whole world's at 70% of a probability of a U.S. recession, and gold has a monetary premium, and you go from 70% probability of recession down to 30% probability of recession, the way you think about industrial output at that point should theoretically completely change. And if gold still has the monetary premium, then you need to reprice silver. Like that was my whole thing. And so the reason I didn't do the gold, I didn't short gold and buy silver, which at some point looked stupid, now it looks like a pretty decent call, was I didn't think gold would lose its monetary premium. I thought what would most likely happen is the world they would rotate on the recession call. And if they did that, then silver was trading too cheap for that world. And so we've seen a nice move in silver finally, which I don't know if it can break above, this 35.5, 36 level. But I think at At minimum, we've probably got into a new range. So maybe now, instead of 32 to 34, maybe we're 34, 36 at minimum. And that's what I would imagine, unless something, anything can happen on each new day. But I do think we've likely established a new range.
I said literally the same thing earlier today on, really? I don't know if it was Futures Power Hour or Overtime, but you can see how there's like a 33.75 line in the sand where even going back to December, you see, I'm looking at it on my screen right now. I see a key reversal. I see an evening star candlestick cluster. You get it through it. I see a morning stick candlestick cluster, another evening star, another key reversal, and they're all buttressed right around that 33.5 to 34 range. So give or take 25 cents on 34.75. And then once you get through 34.75, you can see that the highs that we had last October, where we just fell short of this year in the SIN5 contract, they're right near 36. So that's your new range right now we're in for silver. This is breaking out, so there may be still bias to the upside. I know that both you and I like silver here, continue to like silver. I actually don't have anything on in the tastylive follow account right now, which I should put on there too, to continue to, just to not just say I'm being bullish, but also in the place where people are looking for it at least. Personal holdings aside, I think that's what counts, right, Vic? At least that's what we're told here. I'm told here. Make sure it's on the follow page. So what's to say bad about the metals? I'm a loyal guy. That's why I still watch Star Wars and the Knicks, Vic. So gold and silver have served me really, really well, as have copper in recent months. And the approach is working better than whatever the heck I'm doing in bonds right now. And so I'm going to continue to press the trades that are working for me. And it's the metals this year. For whatever reason, it's the metals in 2025.
For whatever, because the bonds are suckers bet when they're going to blow out the deficits, bro. That's why. Then there's no. What did you see Lynn Alden at Bitcoin 2025? Did you see her 18-minute presentation?
I saw snippets of her speaking on Twitter this weekend.
You got to see it, bro. It's incredible. She did a really great synopsis of a lot of the topics that we talk about here pertaining to the deficit, and why sort of our politicians' incentive structure doesn't lead to anyone coming in and saying, I'm going to address this. And the greatest irony is that is the whole point of the independent Fed, in theory, is that's supposed to be Jerome Powell's job, right? It's to do the thing that none of the politicians will do. That's the point and purpose of an independent Fed that is non-elected, because you cannot, the whole incentive structure of a politician is not going to lead you to want to do what you need to do to defeat inflation. And that is clearly, we have nobody at any levels of the reins of power who have the incentive structure to do anything about this. And so I don't know how you just don't get to a run it hot mentality. Can I ask you, DJT, so Trump Media, they announced plans to buy $2.5 billion worth of Bitcoin. GME doing something similar, $500 million bucks. Jack Mallers has that. I really like Jack Mallers, by the way. He has that new sort of 21, I don't know what it is, quasi-public ventures thing where he's just going to look at ways to acquire Bitcoin. All of this is basically Sailor Me Too. And you knew it was coming.
That's the issue.
You knew it was coming, right? But because have you ever heard of the Samwer brothers? The Samwer brothers are I think they're German. There's 3 of these Samwer brothers that are German. And what they do is they effectively take successful business models in the U.S., they go out and they scale it at other areas of the world where they find there's going to be a conducive marketplace for that same business model. Then they sell it back to whoever. They sell it back to the U.S. entity. So they're basically the arm of the company that helps them create the international presence of their business. And they've realized that all we have to do is copy the business model, localize it, and we can sell it back. I think they did it with Groupon. They did it with a handful of other businesses, right? But this is the whole concept. This is a very simple concept in economics, that if somebody has a bit of success, somebody else is going to come along if they have a high profit margin. Yeah, and they're going to bring down those margins. So this was an inevitability. Once people saw Michael Saylor's success, they were going to copy it. And I wonder what you think about I think this is just the start. I wonder what you think about this new class of people who are jumping into the sailor Me Too strategy.
Well, first off, I think the Samwar brothers reference is really apt here. In the late 90s, for giving some people some more background here, in the late 90s, they went to eBay, were like, you should let us expand your market into Germany. And eBay's like, no, you can't do that. So these guys start their own company, and in 100 days after the company's founded, they sell it to eBay for $43 million. Now, that's remarkable, because you're kind of seeing the same thing happen here, where all these little companies are starting up and saying, wait, there's a business model that we can copy and do better. We can do it the same even. Okay, MicroStrategy, Riot, Coinbase to an extent. I think anyone can look at the charts and see, wait a second, Bitcoin's at all-time highs. How come these share prices are nowhere near them? Because years ago, the only way to get access to crypto was through these proxies. And as market accesses opened up, where you can go directly on your phone now and buy something through a reputable, regulated broker like a Coinbase, you don't need to use the proxies anymore. But even so, prior to the ETFs, which company really had the highest density of Bitcoin on their books? Like, really was just like a Bitcoin vehicle. It was MicroStrategy. And now there are all these copycats out there, which mean, like, why would you buy MicroStrategy for Bitcoin exposure? A few months ago, you could borrow $1 and buy effectively $3 worth of stock with it. And that premium is disappearing by the day with all these clones popping up. So what becomes interesting is not necessarily where we stand right now. I wouldn't trade Bitcoin through any of these proxies. Just, we're not supposed to give out advice, Victor. I'm going to say don't do it. Just if you want to trade Bitcoin, trade the Bitcoin itself. Okay? But if Bitcoin does have another significant pullback here, we're going to get one of those, when the tide goes out, is the emperor wearing clothing. Who's swimming naked, I guess, is the better fit for the analogy there, but like who's swimming naked kind of moment. So if I've been trading MicroStrategy long, I would be counting my blessings, and I would be thinking about exit plans long term.
I think that's the right risk manager's approach. But let me dig in a little bit further. I think you have a long-term bullish point of view on Bitcoin, right?
Sure.
So explain to me, like Jack Maller's thing is all about how to increase the holders' Bitcoin per share, right? How much Bitcoin per share do I own?
Bitcoin per share?
Mm-hmm.
Eyeballs per click?
No, it's what I thought of right away was Adam Newman. Now, Adam Newman he made up some new metric back then during the WeWork days. Damn, I can't remember the goddamn metric, but it was brilliant. It was brilliant in its diabolical nature. And as soon as I saw the Bitcoin per share from Jack Mallers in 21, that's the first thing I thought of. Like, I get it. It's interesting. It's sexy.
Community. Yeah. Okay. WeWork used non-GAAP metrics like community adjusted EBITDA.
That's right. Community adjusted EBITDA. That was the one.
That's so good. That's so
good.
balls.
It's so good.
It's like, okay, that guy's a fraud.
but also, how do I give him money?
and Massa is just like, this guy is a genius.
Is Massa a part of 21? Let me not say that. I think he is, though. Hold on, let me look, because I got to know this now. I want to say he's a part of it. Yes, he is. SoftBank is a part of it.
So underappreciated by Western investors and traders because he's not in Europe or North America. This guy would be the biggest. If this guy was an American, I think he'd be the biggest personality in America, given his boom and busts and
slangs.
He's Tom Lee on steroids.
Yeah.
Okay.
Have you ever seen SoftBank like presentation? like a PowerPoint presentation when they do their annual thing. Sometimes it's just like I want to find it. There was just some image one time, some like kind of Japanese picture or something like that. It was hilarious. All it was, and it was about taking risks, kind of like being fearless or whatever. It was just an image. And I'm like, what a gangster. He just had one picture of one image and he's hawking WeWork at the same time.
I think I've seen this a lot of places. I think you should share this on the screen. This is from the Masa's. This is so good. Okay.
I just saw Ryan's Tom Selleck photo in the
This is from SoftBank's Q1 2020 slide deck, Victor, an image that you're to show.
See, I'm telling you, this
guy's a legend.
I love that they always do stuff like this. All right, let me put it in front of people.
And the point here is like he is so eccentric, right? And he takes these big swings, and he's made tens of billions of dollars. He has subsequently lost tens of billions of dollars. He has then made it all back, right? So the guy has way bigger cojones than you and I, Victor, that's for sure. But this was in his Q1 2020 slide deck explaining the firm's performance because of COVID. Right.
Shout out to SoftBank.
Good for them.
Good for them.
Good for
how
America.
how apropos is it though? It seems like they learned, community adjusted EBITDA. How do we transform that into Bitcoin? Bitcoin per share. Jack Mallers, get out there.
We fixed it. I said it to you the other day, Victor. This timeline increasingly sucks.
Bro, we are in the clown world. If it's just so obvious, it's so glaringly obvious, which is a bit scary to me.
Tell me about this. You were on the start of the show. At the start, if I may take the reins for a second, the price of truth with Chris Vecchio. At the start of the show, you were saying that we are in clown world here. If people are going to post this on Twitter or Facebook or Pinterest, they should title it Clown World.
Yeah.
I asked you before the show in the green room what you thought of the bill. Did you see the news while you were sleeping? And you said you had tweeted it out. What's your take on what happened with Musk and Doge and this clown world, big, beautiful bill? Because you seem really bothered by this.
Yeah, because so I told you right away. I think it's a political pivot, right? It is 100% a political pivot, and they're not doing that by explaining it to the people. So here's what ends up happening. I saw it with the Biden administration. You promise one thing, and then you do another, and your base argues both sides. So they end up looking very stupid, because they are defending one position one day, then the next day they're defending the exact opposite position, trying to rationalize this choice that they made instead of going, wait, what do I believe in? What do I feel is the right course of action? And then let me cheerlead when politicians on both sides advocate for what I believe is the right path. And let me criticize when politicians of both sides of the aisle take a path that is against what I believe is the right path. And I think at the ethos of what they were trying to do at the outset was to change the debt trajectory, change money flows to an extent that would generally benefit a certain class of people, the base. And I think this bill represents a complete pivot from what that early strategy was, from what those promises were. And they haven't done it by communicating to their political base. So what's going to happen is, eventually, those same people who wanted this certain set of things is going to start rationalizing the exact opposite. It's just going to take some time. And so I feel like, and maybe I'm wrong, I can be totally wrong, and I'll come back and I'll say I'm wrong. But when I read through this thing, I think I saw it for what it was, which was a lie, a total lie. And I think, for Elon Musk even to send Doge into the Social Security office, send Doge into Medicare, but you didn't send him to the Pentagon? Why not? Why didn't you send them to the Pentagon? Why are we going from people put you in office. You promised to end the Ukrainian war on day one, which again everybody knows is bullshit. But the point is the direction you headed. Right? If one side wants to escalate, the other side wants to move towards peace, and you've
assigned a sense of
peace.
urgency, right? Like that's the point. When you say you're going to do things on day one, you're telling people this is a priority. I want to get this done as soon as possible.
No, it's
not
just,
like I'm getting it done on January 21st.
But you gave there. That was one place where there was clear differentiation between the two candidates.
Okay.
There weren't many, but that offered one.
That was true. Yeah.
And so it wasn't. I think what was behind that is that people don't just want this conflict ended. They don't just want to stop funding it. They are asking why we're paying $1 trillion, which is more than our $800 billion defense budget. Do you know what that doesn't mean, Chris? That doesn't mean, okay, we see you. You have a problem paying more interest than the defense budget. You know what we'll do? We'll increase the defense budget so it's more than the interest. It's like, no. You've misinterpreted this altogether. That's not what that's supposed to do. It's just generally, I think.
I haven't thought about it like that. That's funny.
Now that talking point's like done, I just think it's a complete misinterpretation of what the voters' sentiments were. And it's just going to take time for the people to recognize what's in this thing, because the average everyday working American is not going to dig into this thing. And what I think one of the biggest problems is, because the Dems are not deficit hawks, you don't actually have an opposition to this bill. You don't have anybody that's on mainstream media on the opposition side speaking to what this thing is and how it's going to pass. All you had was like the fake outrage about, oh, they're going to cut Social Security. Oh, they're going to cut Medicaid or Medicare. And so my issue, man, is just like, I don't care who does the thing. I didn't care if it was Biden doing the thing. And I don't care if it's Trump doing the thing. I think exploding the deficits at the pace that we're on is going to have massive consequences for people, and it's going to take them time to figure it out. It takes 12 to 18 months for this stuff to work its way through the system. It moves on screen first. It takes 12 to 18 months for the people to see this in their regular everyday lives, and when they see it, they're either going to get pissed, disillusioned, apathetic, or really, really angry. But it'll move on the screen first, man, and we see it on the screen first, and that's why.
Yeah, I mean, this is my only issue with assigning either party the title of fiscal hawk or fiscal deficit. Neither party is immune to spending money. They both seem like they're allergic to not spending money. Okay.
But one side pretends like they're going to do something about it.
Well, that's kind of what bothers me most, because we do need fiscal conservatives in this country, but the political party that pretends to be the home for those people frequently does not do those things, right? So, like Clinton ran a budget surplus, but then Bush did the Medicare Part D funding in Iraq and Afghanistan wars, and budgets go up, and we get the global financial crisis. So Obama spends a ton of money, and then Trump still adds 1.9 trillion. Average increase in the annual deficit, which again, part of it's COVID, but Biden is still running at a 1.5 trillion annual average deficit.
No,
increase.
he was 2.2
on average over the 4 years.
Yes.
Okay, I got to check my math, but okay, 2.2. And this next one that we're doing, Victor, right? Like, where does it put us with? I mean, we're going to go through Senate revisions, but like, it's still going to be in the nosebleed territory.
It's going to be more than Biden.
We're running deficits. I mean, we said this during the COVID years when Biden was president, to be fair, how we were running deficits and debts on par with what we do during war. But like, we're like turning that dial up right now. And so if you didn't like the Biden economy,
yeah,
there might be bad news. There might be some bad news coming. If you didn't like the Biden economy, there might be some bad. Like, for now, it's stable. The JOLTS report today, I think, deserves its flowers. Okay.
The difference is this one will be more supply side.
Yeah.
Supply side economics. So perhaps you're not going to see 9% inflation, but it's still not going to feel good. It's not going to feel good as we watch them inflate the debt away.
5% inflation with 6% unemployment with a $2 trillion deficit is going to feel like crap.
For some people, not for everybody.
Well, not for everyone. Do you know why? Because government deficits are private sector surpluses.
Correct, bro.
So the gravy train's going to keep going. It's just that none of us are on it.
Oh, I don't. What are you talking about? What we do is, I mean, I'm not like in the first class car of that train. I'm more like a stowaway in the.
Just
I'm a
here,
stowaway.
Victor, he's on the take. Victor's on the take. Everyone, Victor's on the take.
No, I'm saying being an asset owner is in some part aligning you with where that train's moving, right? I'm a stowaway with what's that handkerchief called that's tied to the stick? You know, that you carry your luggage in a handkerchief tied to a stick. I'm holding that in a stowaway cart somewhere in the back. Yes, that's if I'm on the train at all, that's my status on the train, and that's
with all your gold and silver.
Correct. It's gold,
in your
silver,
bindle.
and some asset, being some part of an asset owner. I
suppose, listen, that's a fair distinction. If you're an asset owner, you are on the train whether you like it or not. Okay? So like Victor, as someone who has exposure to stocks, precious metals, if they're going to pump deficits and debts, that may be good for you in a strictly like balance sheet perspective, maybe. But it's not because it's something that you want to occur. Like you don't want to see your gold and silver outperforming because the U.S. is inflating the debt and deficits and blah, blah, blah.
Yeah. I want to say it's not that it's good for me. I want to be very clear.
That's why I did that. You know,
I think I can figure out what to do regardless of what those guys do. So it's not good for me. It's just I'm going to do my best to try to figure out what to do given the rules that this other group sets. That's the way I would probably phrase it, man. Crude oil making a nice little run up here from its lows like the mid-50s. Now we find ourselves in the mid-60s. Give me the catalyst narrative from your perspective. It's helped energy stocks the last 2 days. Yesterday was the leader. Today I think it was the second top performer behind technology. I see this, if there's any legs to this broadening out story, at some point, I don't know that energy becomes this like breakout star, but I do think a lot of these names are depressed in terms of their valuation here. They've been left for dead. And it doesn't surprise me at all that over the last couple of days, as people search for value with NVIDIA, Broadcom, Microsoft, and a lot of these stocks in the nosebleed section, and even the second derivatives like CCJ and a lot of the nuclear stocks, they're also in the nosebleed section. You go searching for value, and it doesn't surprise me that energy stocks over the last couple of days have been pretty decent bets alongside this move in crude oil. What's the narrative here, and then how do you think about that whole sector?
So crude, it's tough to disentangle today. What's pushing crude higher? Is it geopolitical risk or is it a growth reason? Now, I know from the JOLTS jobs report, that's hard data, right? It's actual job openings, and those are much greater than anticipated, 7.4, basically 7.39 million versus 7.1 million expected from a previous of 7.2. You also have the OECD today release their new forecasts for the rest of this year and for next year and beyond. And we see that the OECD is slashing U.S. growth estimates from 2.8% down to 1.6 for this year, 1.5% for next year. You see that global growth is likewise downgraded, which then begs the question, how would oil theoretically respond to a headline like weaker global growth? And you see that in your mind's eye, you could say that, no, that would be bad for oil. The world needs energy to grow. And if we're growing less, then we probably have less demand for oil. But that doesn't move the needle. And we have another attack by Ukraine against Russia, the Kerch Bridge, I think, in Crimea, after their attacks against the 5 Russian airfields the previous day over the weekend, which takes out like a third of Russia's long-range nuclear bomber capabilities. That's not important, I suppose. Keir Starmer in Britain's talking about war readiness. NATO's announcing a 5-fold increase in ensuring air defense for soft targets at air bases. So, no, it looks like, and you mentioned But you said yourself, your Pete Hegseth story, very different tone among defense people this year.
You know what's funny too is there's a part of me that goes, because this whole unipolar system we created, We created this unipolar system, and so we are spending so much money on defense because we want to be the only people with guns. You know what I mean? If you're the only people with guns, then you get to dictate what happens. So in a weird way, it's sort of funny that I wonder if people sort of fully comprehend what it means to spread defense spending throughout the world. It just means military readiness and guns and this military technology. Like everybody's armed up. You know what I'm saying? Like all your neighbors have a gun. Are you in a safer neighborhood or a less safe neighborhood than a neighborhood where one guy has a gun?
I don't know. I feel like one of the great miscalculations of global history, in my opinion, is how the Soviet Union under Joseph Stalin handled itself in the post-World War II era, where he was very paranoid that America was going to wipe out the Soviet Union because we had nuclear supremacy.
Mm-hmm.
But we didn't. In the waning years of World War II, what other country had a nuclear bomb? People wanted Truman to march on Moscow and drop bombs on Beijing. And we didn't. We could have. We had the big stick when no one else had a stick that could swing like it. We did not. So I like to think that there is some benevolence. We have some capacity for benevolence, and that as Americans, we don't think that we need a swinger stick. So what's better, Victor, a neighborhood loaded with guns or without guns? I prefer without the guns. If there's going to be a neighborhood full of guns, I'd prefer to be the person with the gun. Either way.
No. I think I presented it as it was an easy question, but I don't know. Sometimes the safest place to be is the place with the threat of violence, because then everyone treats everyone else with the utmost
like Syria.
Respect.
I'm
just
Iraq.
saying. No, I'm saying like
Baltimore,
like Texas.
Okay.
If you know everyone's caring and they know how to use it, you say hello to your neighbor. You treat them with respect. If you think you might get away with some slick stuff, you take his Amazon package off his porch.
You know how nice it is going through life not worrying that my neighbor's carrying, because it's like they're just gardening. That's not really a Glock. It's actually just like a little hoe. I don't know where I'm going with this, Victor. Either way, I live in the woods. I'm more concerned with mountain lions and coyotes than I am with people.
So you don't have a gun? You don't have a gun?
No.
There's in New York?
In New York
that
State,
area that you're in?
I'm allowed to shoot fur-bearing animals like bears, coyotes, what have you.
Squirrels.
But you're not allowed to discharge a firearm in my town, which seems like a conflict.
That's like weed is legal in Illinois, but it's illegal at the federal level. You figure it out.
I talked to one of the person at animal control in town, and then called up the Department of Environmental Conservation to see if the coyotes could be relocated here, and they actually did. They relocated the coyotes that were like nesting in the woods near my property. But the guy in the town was like, "Listen, it's illegal to fire a gun or use like a bow and arrow, but if I were you, I would just do it and then say like, what happened?" I'm like, guy, I'm not like buying a bow and arrow to kill some coyote pups, man.
I would have, bro. I would have. I'd be like, this is my chance. All I've been doing is staring at numbers for 12 hours. I've been dreaming about this moment. I'm gonna put on war paint, wear camouflage, kiss my son and my daughter. I see you on camera the next day
wearing the coyote. Okay.
Eating like some coyote jerky.
Yeah, and like you're talking, you're like the mouth is open and your head's in there, and you're like talking like, I've got to go feed my kid.
All right, bro. If the people want more from you, tell them where they can go.
tastylive.com, of course, Monday through Fridays, Futures Power Hour, 1 p.m. Eastern. Let Me Explain Tuesday mornings, 9:40 a.m. Eastern with Tom and Tony. Overtime Monday through Thursdays with Radigan and Spivak, 4 p.m. Eastern. And then here with Victor on usually Wednesdays, The Price of Truth, 6 p.m. Eastern. Of course, at CVicUFX on Stock, Twits, and Twitter. As Grok tells me, Vic, I mostly tweet about my depression over the Knicks and how we need to build more housing. So as we move away from the Knicks, we're going to get back more to the economics. And call your local townspeople. Build more housing.
Your local townspeople. I'm going to ask Rock, who are my local townspeople? Chris Vecchio, everybody. Always appreciate the discussion. Do us a favor as you get out of here. Hit the like button. Subscribe to this channel if you haven't already. Subscribe or go follow this man on all of his socials. I will see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, peace. Save the Coyotes.